I'm there. I'm there.
Okay, sir. Start.
Yeah, sure, sir. Warm greetings to one and all. Honorable Chief Guest of the inaugural session, Professor C.H. Gopal Reddy, Registrar, Usmania University. Guest of Honor, Professor Sriram Venkatesh, Nodal Officer, RUSA 2O, Usmania University. Keynote Speaker, Sri Ravi K., Deputy Commissioner of State Tax, Commercial Tax Department. Professor V. Usha Kiran, Head Department of Commerce, Usmania University. Chairman Board of Studies, Professor Prashant Atma, Dean Faculty of Commerce, Professor V. APPROA, Professor D. Chinnappa, Principal of the College and Coordinator of the Center for Promotion of Financial Literacy, Usmania University. Dr. Naresh Reddy, Co-Coordinator, CPFL, distinguished speakers of the workshop, dear colleagues from the department, and all the participants who have joined today with us from the different parts of the country. I extend a warm welcome on behalf of Department of Commerce, Usmania University, to the 7-day National Workshop on Financial Literacy on Income Tax and GST, a practical approach. We begin the proceedings of the day with a sneak peek into the portals of our department. Department of Commerce, Usmania University was established in 1945 and is celebrating Platinum Jubilee this year. The department has been providing commerce education with a specific focus on teaching and research. It is one of the 10 departments housed in the College of Commerce and Business Management. Situated in the main campus of Usmania University, has a history of over 6 decades, caters to the academic requirements of over 1,500 students at PG level. The services of the department are being provided not only to Telangana in the form of formal system of education, but also to the entire country in the form of distance and open learning. I feel proud to be the part of this department and to be an Usmanian. This workshop, which is organized by the department, is an attempt to provide the necessary awareness to the participants and make them financial literates in the area of taxation under the Center for Promotion of Financial Literacy, a center established at Department of Commerce, Usmania University under RUSA 2.0. It is customary to begin any program by invoking God's divine empowerment. I request you all to kindly pay attention and take a careful posture while we put ourselves in the presence of God.
महागणपतिं मनसा स्मरामि महागणपतिं मनसा स्मरामि महागणपतिं मनसा स्मरामि महागणपतिं मनसा स्मरामि वसिष्ठवाम देवादिवन्दित महागणपतिं महादेवसुतं गुरुगुहनुतं महादेवसुतं गुरुगुहनुतं महादेवसुतं गुरुगुहनुतं महादेवसुतं गुरुगुहनुतं मारकोटि प्रकाशं शान्तं मारकोटि प्रकाशं शान्तं महाकाव्यनाटकाधिप्रियम् महाकाव्यनाटकाधिप्रियं मूषिकवाहनमोदकप्रियं महाकाव्यनाटकाधिप्रियं मूषिकवाहनमोदकप्रियं महागणपतिं मनसा स्मरामि वसिष्ठवाम देवादिवन्दितमाः गणपतिम्।
Welcome back. This webinar is organized to throw light on Indian taxation system and the reforms which are brought about in this sector to create an awareness among all, which is the need of the hour. Now I invite Dr. Ravi Kumar Jasti, the Program Director, to deliver the welcome address. Over to Ravi, sir. Sir, let me introduce Ravi, sir. Dr. Ravi Kumar Jasti is currently a Senior Assistant Professor at Department of Commerce and also is the Joint Director, University Foreign Relations Office, Osmania University. Sir has presented research papers at more than 30 national seminars in India and one international seminar in Singapore. He was honored with Best Paper Award at National Seminar organized by Mumbai University, having a rich administrative experience. To name a few, he was a Vice Principal, Additional Chief Warden, Additional Controller of Examinations, Placement Officer, NSS Program Officer, etc. He's active in organizing workshops and seminars in the department. I invite Sir to deliver the welcome address. Over to Ravi, sir.
Thank you, Sandhya Madam, for giving the brief introduction about me. So I welcome on behalf of the Department of Commerce, I welcome all the dignitaries, participants to the 7-day national level online workshop on financial literacy, on income tax and GST, a practical approach. I welcome Professor C.H. Gopal Reddy, Registrar, Usmania University. I welcome Professor Sriram Venkatesh, Nodal Officer and Control of Examination, and ROSA 2.0. I welcome Sri Ravi Kanuri, the Deputy Commissioner, State Tax. I welcome Professor
Ravi, sir, it is muted. Unmute yourself.
Yeah, thank you, Sandhya. Sorry for the disturbance. So, on behalf of the Department of Commerce, I welcome all the dignitaries, participants to the 7-day national level online workshop on financial literacy, on income tax and GST, a practical approach. I welcome dignitaries Professor C.H. Gopal Reddy, the chief guest of today's workshop, Registrar, Usmania University. I welcome Professor Sriram Venkatesh, Controller of Examination and also Nodal Officer for RUSA. I welcome Sri Ravi Kanuri, Deputy Commissioner, State Tax. I welcome Professor D. Channappa, the Principal and Coordinator for RUSA Mini Center, UCCBF. I welcome Dr. G. Naresh Reddy, Co-Coordinator, Center for Promotion of Financial Literacy. I welcome all our functionaries, Head of the Department, Professor V. Vishakiran, Dean Faculty of Commerce, Professor V. APPROA, Chairperson Board of Studies, Professor Prashant Atma, and also I welcome all my colleagues from the department and all other colleges. I also welcome all the resource persons who are presenting, they're going to deliver the lectures on this workshop. The purpose of this workshop is to enlighten the students, faculty and tax return preparers. This workshop is broadly divided into two parts. One is related to the direct tax, another is related to the goods and service tax. Our taxation system is slowly moving from the one nation, multiple taxes to one nation, one tax as per the NDS government policy. India government recently replaced the 17 indirect taxes with the one GST. Expertise knowledge of resource persons from various parts of the India may help the participants to enhance their skills in an Indian taxation system, both direct and indirect tax system. In this workshop, we are going to deliver the inputs on reforms in Indian taxation system, tax planning, e-filing, overview of GST and e-filing, e-way bills, supply of goods, valuation of goods, registration under GST, books and records are some of the important areas to be covered in this workshop. And this workshop is going to be held for 7 days from today onwards, that is 23rd to 29th 7 days with 21 sessions in total, and it is taken by the efficient resource persons and is going to be good inputs to the participants. And as of now, there are 1,000 plus delegates are registered for this workshop, and most of them already joined in the Zoom. Some of the delegates are viewing through the live stream from the YouTube. So that I thank all the participants, those are registered for this workshop. But because of that, unless the participants are pay the attention, there is no use of conducting the such type of workshops. I request all the participants to focus and to listen these uh, sessions carefully and interact with the resource persons and get the benefit from this the practical orientation of this income tax and GST. Once again, I thank the department and Rosa, the principal of this college, Channappa, and Naresh Reddy, and head of the department for giving the wonderful opportunity to organize this type of workshop and giving the inputs to the students. And once again, I thank you to all. Over to Sandhya.
Thank you, Ravi, sir, for taking initiative in organizing this workshop and also for giving me an opportunity to be the part of this event. Now I invite the co-coordinator of Center for Promotion of Financial Literacy, Dr. G. Naresh Reddy, to speak a few words. Dr. Naresh Reddy is a senior assistant professor at Department of Commerce and has occupied various positions in Osmania University, such as Additional Controller of Examinations, Placement Officer, Youth Welfare Officer, NSS Program Officer, to name a few. He has been conferred with Best Paper Award thrice at All India Accounting Conference and also has done a UGC major research project. He is the coordinator for the self-financing courses in the department and is currently the co-coordinator of Center for Promotion of Financial Literacy, established at Department of Commerce, Osmania University under RUSA 2.0. Over to Naresh, sir. Over to Naresh, sir.
Thank you, madam, for your introduction. I welcome all the dignitaries to this particular 7-day program. I congratulate Dr. J. Ravi Kumar, Director of the workshop, Dr. B. Sandhya Rani, madam, convener of this workshop. I thank all the senior teachers who has given the opportunity to serve for this center. So under this banner, we have already organized one workshop on financial literacy. This is the second one. The Center for Promotion of Financial Literacy has designed to raise the financial awareness, promote good financial practices, and drive the sustainable change in behavior, ultimately resulting in informed financial choices and greater sense of control over one's finances. The center uses a combination of tools such as conducting financial awareness campaigns and organizing seminars, workshops, and experts tips and talks, educational videos, experimental learning, and financial planning tools to drive home key messages and benefits of using formal financial services. The center is aimed to provide financial counseling services through face-to-face interaction as well as through other available media, educate the people in rural and urban areas with regard to various financial products and services available from formal financial sector, make the people aware of the advantages of being connected with the formal financial sector, and make people aware of the social security schemes available and help them to utilize the benefits of the schemes like pension, health and insurance, etc. This center has formally inaugurated by Professor C.H. Gopal Reddy Garu, Registrar Usman University, Hyderabad on 24th August 2020. Many studies proved that the extent of taxpayers' knowledge can have a major impact on the degree of compliance with taxation rules and regulations. Low knowledge creates uncertainty about the requirements of tax regulation and can lead to high degree of involuntary non-compliance. So taxpayers tax literacy rate taking into consideration of the individual ability to fill the tax return form independently, taxpayers interest in learning about tax and incident of errors in filing the tax return forms. So we academicians recognized the importance of addressing low levels of tax literacy and tax morale in students and teachers, but the change is how to reach the in this pandemic situation is important. So because of this situation here we are into online. So finally so our colleagues Dr. J. Ravi Kumar and Sandhya Rani planned this workshop to reach the unreached and educate them on the tax compliances. I wish the participants a happy learning in these 7 days. Thank you.
Yeah. Thank you, Naresh sir. It's true, recognizing the need to create awareness on Indian tax system, we have taken up this workshop. Now it is the time for us to uh, invite the dynamic coordinator of Center for Promotion of Financial Literacy and principal of the college, Professor D. Chennappa, to address the gathering. Professor D. Chennappa has a teaching experience of over 30 years and has been conferred with the Best Teacher Award by the Government of Telangana. Sir has a rich research experience, produced many PhDs, and has accomplished 4 government-sponsored research projects, 1 UGC major research project and 1 minor research project. He published 20 books and many research articles in and published many research articles in national and international journals. He is a resource person to various conferences and workshops and has conducted many national and international conferences. Sir has served in administrative positions and was the chief warden for OU hostels and mess, principal of PG Secunderabad College, to name a few. May I request Chennappa sir to deliver his message?
Yeah, good afternoon. Am I audible?
You're audible, sir.
Good afternoon, one and all, and I welcome all the members for this 7-day national webinar on financial literacy and income tax. The practical approach for weekdays going to start from today to 29th of December. I take this opportunity to welcome our chief guest, beloved Registrar Professor C.H. Gopal Reddy Garu, and our guest of honor, Professor Sriram Venkatesh, Nodal Officer for this ROSA, and is a controller of examination from Usman University. And today is a very important person, keynote speaker, Sri Ravi Koniru, and our senior most executive committee member of Usman University, Dean Faculty of Commerce, Professor V. APPROA, Professor V. Ushakaran, Head Department of Commerce, Chairperson, Professor Prashant Atma, and the co-coordinator for this RUSA Mini Center Financial Literacy, Dr. Naresh Reddy, and the program director who has taken a lot of initiation to conduct this training program for 7 days, Dr. Jasti Ravi Kumar, and who has been coordinating and conducting this 7-day webinar by Dr. V. Sandhya Rani, and my colleagues, Dr. Patrick and Indrakanti Shekhar, and constant college faculty members, and almost all 900 registered delegates, and technical support given by the Mr. Venkatesh Yadav from Palamur University. I welcome one and all for this 7-day webinar. This program is going to be sponsored by the Usmani University. The Usmani University aims to achieve international standards of quality and excellency in teaching and research. This is the only one motto of the Usmani University. With this motto, the 7th oldest university,
Okay, Anumata అయింది.
100 years old university, approached UGC under the quality excellence in select state universities which was selected, and we got the result. The motto is creating the excellence in teaching and research. To achieve this, again, university has identified 7 mini centers. Apart from the 7 mini centers, the University College of Commerce and Business Management has got 2 mini centers. One is a financial literacy, where we can see the co-coordinator is very active, and another co-coordinator, Dr. Sudha. The mini center is working for to develop the entrepreneurial skills, development and sustainability by the Department of Business Management. Under this, so far we have organized two
Co-
programs. One program being organized by the Department of Commerce under the financial literacy to the MCOM third semester students. Similarly, Department of Business Management under the programmer Dr. Sudha, we have organized the entrepreneurship development for the MBA third semester students. Now this Dr. Kasi Ravi Kumar has come up to create the awareness onto the income tax and GST, and he is putting one step ahead to create a practical approach, practical knowledge to the participants. So really, I take it very privilege and honor to organize this 7 day workshop. Then definitely we are moving to these directions where our co-coordinator mentioned that creating to the financial literacy, it may be taxation or it may be GST, it may be insurance, or it may be financial services. We take this platform and we would like to reach to the unreached people. We would like to reach to the even other areas also, not confined to the only students and online or when the situation become normal. We would like to reach to the even the physical format to the unreached people. Then come back to this 7 day webinar. The topic is a very contemporary topic, natural, definitely. As an individual tax player, the salaried people we should know about how the tax system is working, direct tax is working. Now it is a one nation, one tax, the GST has come up. We have to see that how the GST has come up, how the GST is working for the nation. The motto of the GST to eliminate the cascade system. Cascade system means value added tax. So for more and more number of tax systems will be eliminated, only one time tax can be collected. And creating the competition among to the corporate world and encouraging to get the transparency in the tax system and what are the complex of tax system should be there. That should be made in a very easy doing a business and what are the technical features that all technical features have been vanished and they have brought so many changes into the GST. They have brought it about GST form number 9. Under that, all traders they have to fill their income, and once whatever the tax they paid it, again they get the returns also based upon the form number 9. Again, another form they have brought it as a 3G. Under that, what they can get back, it not only pay to the government, they can get back as the returns. And another GST 1B form is also the B2C business, where the B2C business is there, and how the sales are moving, how the sales are changing one hand to another hand, how the tax system is working. And another great reforms brought into the GST is a TRAN, one form that has made it as a wonderful working in India and made it as a red taxpayer. Means of those who want to avoid the tax, those who want to escape from the tax, they make it as a red taxpayers and identified and fixing about the prices that can be called as a MRP prices and some of the items no tax from the any loose product. So any product loose, suppose rice is there, it can be sold into the loose. It cannot be packed and printed and MRP. For that, there is no tax at all. So again, not ending to these aspects. Again, they have gone to link with the e-commerce portals. GST is very much set on digital format is working, and the e-way e-tax has come up, and many more changes have come up. And really, I have seen to the entire program sheet of weekdays. These programmers, Dr. Jasti Ravi, as well as to the Dr. Sandhya Rani, they have brought very wonderful speakers They have tapped the wonderful speakers, and definitely all the participants will concentrate and listen these 7 days. In the afternoon times, if they listen these 7 days time, definitely they can enrich their knowledge and their direct taxes as well as to the GST. With this inaugural remarks, I wish that this 7 day program is going to be grand success, and good luck. My best wishes for all the members. Thank you, one and all.
Thank you so much, sir, for your kind words and for encouraging us by giving an opportunity to take up this workshop under Center for Promotion of Financial Literacy, center established under RUSA 2.0. I'm glad to invite Professor V. Apparao, our ever supporting Dean Faculty of Commerce, UCCBM, who has more than 30 years of teaching experience. He's an executive committee member at Usmania University. His areas of specialization include accounting and finance. He has been conferred with Best Commerce Faculty Award by IPA in 2008. He has many research papers and books to his credit. He produced many PhDs and has occupied several administrative positions in Usmania University, such as Controller of Examinations, Principal at UCCBM, to name a few. This year, Department of Commerce, Usmania University is organizing All India Accounting Conference under the leadership of Professor V. Apparao as the conference secretary. I request Sir to deliver his message. Over to
Thank,
Apparao, sir.
thank you for your introduction. Am I audible?
You're audible, sir.
Okay, thank you. So, good afternoon, all the participants and my colleagues from the Department of Commerce, University College of Commerce and Business Management. Uh, at the outset, I welcome all the participants and dignitaries for this 7 day national online workshop on financial literacy on income tax and GST, organizing by a practical approach, organizing by Department of Commerce under RUSA 2.0, because this program is organizing with the help of funds provided through RUSA funds. I congratulate Dr. J. Ravi Kumar, Program Director, and Dr. B. Sanjay Rani, Program Convener, for taking initiative to conduct this program. And anyway, there will be support from Professor D. Channappa, Principal of University College of Commerce and Business Management. Today's program chief guest, Professor C.H. Gopal Reddy Garu, Registrar of our university, and my colleagues, Professor Prashant Atma, Chairperson, Board of Studies in Commerce, Professor V. Usha Kiran Madam, Head Department of Commerce, and Program Director J. Ravi Kumar, B. Sanjay, and Dr. G. Rajesh Reddy, Professor D. Channappa, Principal of University College of Commerce and Business Management. And so Channappa may be operating from college, isn't it? You are from operating college or uh, home?
Yes,
Both are
sir.
sitting at one place. Okay. Anyway, so congratulations to Channappa also for supporting and extending financial support under RUSA. And this is the second program organizing by University College of Commerce and Business Management from the Department of Commerce. Already one program was organized in the month of September under the supervision of Dr. G. Naresh Reddy, co-coordinator of the RUSA Center. And this financial literacy is important for all the people in the society, because everybody should know the financial aspects and financial services, whether they are educated or uneducated. But for investment decisions or for any loans decision or share market or banking transactions, or even for insurance or online banking or online business, for anything nowadays, so financial literacy is very, very important. So that's why, keeping in view the importance of financial literacy in the modern society, so this center has been say opened under RUSA, and extending say support and extending say facilities to the people and different stakeholders like students and others like academicians, non-academicians, whoever needs say financial services, financial advices. Through this center we can provide. And definitely, because the programs are organized through online only, this center definitely will helpful to the stakeholders in the society, Actually, because of Corona, now we are organizing only online programs, but there is a need for organizing programs offline also. There is a need for practical knowledge because the here also we have included a practical approach. So we have theoretical knowledge. For example, how to assess our tax assessment. So though we are employees, majority of employees are depending on the auditors and also chartered accountants for the assessment of the tax. So therefore, there is a need to provide a particular service, how to assess tax. We may be having data, but we are not able to calculate our own tax. That is one of the limitations. So that's why through this program, definitely you will be exposed to practical situations and how to calculate tax and how to say uh, how to calculate tax and other things relating to the GST and other things. Even for entrepreneurs also, this program may be useful. So nowadays, everything is linked to the technology because our life is totally linked to, say, user ID, password, and mobile phone. If these three things are there, automatically, then we can say take any decision, and we can make use of the financial services that are there in the business environment. So programs like this, particularly the workshop, may be useful to the all the participants, and they have identified good resource persons, and they are going to cover different topics with the practical approach. Definitely, all the participants will be enlightened through this workshop, and I think all the participants will enjoy this program, and the program may be a grand success. So, with these observations. Once again, I congratulate organizers, my colleagues from the Department of Commerce, and wish you all the best. Thank you for giving this opportunity. Okay. Over to
Yeah, yes.
Ranjaran. Okay.
Thank you, APPROA sir, for stressing that there is a need to create a financial literacy among all, and this program will definitely contribute tax knowledge to the participants. Once the college reopens for offline programs, we will definitely conduct many more of such programs to benefit the public in general.
Okay.
Now I request a humble and soft-spoken head Department of Commerce, Usmania University, Professor V. Usha Kiran, to express her views on this occasion. Dr. V. Usha Kiran is a professor at the Department of Commerce and also serves as honorary director at ICSSR SRC. She is also holding other positions such as director, Directorate of Placement Services, Usmania University, and is a coordinator at UGC UPE Bureau of Human Resources Placement and Training Center. Ma'am has rich teaching and research experience, and her areas of research interest include finance, accounting, and taxation. She has been conferred upon various awards, namely National Merit Scholarship, JRF of UGC, Best Commerce Faculty Award by Institute of Practical Accountancy, twice Best Research Paper Award at All India Accounting Conference. Ma'am is the General Secretary for IAA Hyderabad chapter. Very recently this year, the government of Telangana has felicitated ma'am with the Best Teacher Award. Congratulations once again, ma'am. Over to Usha, ma'am.
Thank you, Sandhya, for the introduction. I hope I am audible.
You're audible, ma'am.
Thank you. On behalf of the department, I welcome each one of you to this 7-day workshop. Respected Chief Guest, Professor Gopal Reddy, Registrar of Usmania University. We have with us guest of honor, the Nodal Officer of 2.0 RUSA, Professor Venkatesh Sriram. We have with us Deputy Commissioner of GST, Sri Ravi Kanuri from Telangana government. And we have with us the colleague, the coordinator and principal of the college, Professor Chennappa, and co-coordinator, Dr. Naresh. We have Dean, Faculty of Commerce, Professor APPROA, Chairman, Board of Studies, Professor Prashanta, and Director of the seminar, Dr. Ravi, Co-Director, Dr. Sandhya Rani, all my colleagues from the department, and also the resource persons who have come for this particular inaugural, and participants, ladies and gentlemen, a warm welcome. Let me announce on a happy note that we are into the platinum jubilee of the Department of Commerce. We are celebrating 75th year, and on this occasion, I extend a warm welcome to all of you. And over this long journey, like we have established ourselves in 1945, and over this long journey, I can tell that the Department of Commerce has now taken the #1 position in attracting the students at undergraduate or postgraduate level. This happened because the commerce course, especially the undergraduate course, is a terminal course. Whoever have chosen this course, BCom, they've got lots of employment opportunities, and this being the terminal course, most of the people have switched over to commerce education. First, we started with BCom and then diversified into various other activities, like various other programs also we started offering. BCom Computer Applications, BCom Taxation, and BCom Honors, BCom Foreign Trade, and very recently we have launched a course called BCom Business Analytics. As we are going with the trends in the industry, naturally we are helping out the students that they are getting the skills that are required by the various industries and their subject domain. That may be the one reason why we are standing first in attracting the students. And let me tell you that we will continue this diversification, and also we will see that the strength areas are being covered. And for the commerce department, I can say that the core strength areas are accounting and taxation. Both of them are very core. Even if we are into various diversified programs, we never left these two areas, and we are continuing to adding up some more new areas, continuing the accounting and taxation as our core strength. Coming to the taxation, it is one of the fascinating subjects, I can tell, because I taught this subject for several years. It is fascinating because it touches everyone, whether directly or indirectly, whether you belong to commerce or some other course, some other case, like even the people from the science and all others, they have to pay income tax. Therefore, every year, once the finance bill is, being presented in the parliament, everybody, tries to think about the income tax changes, what they are and how they are affecting the common men. Therefore, it is directly or indirectly, it touches each one of us. Therefore, I can tell that this is one of the fascinating areas where we have our core strength. And the department offers taxation in various through various courses at undergraduate level and postgraduate level. We have the taxation as specialization subject. In addition, we have got a diploma in taxation, which is run for 1 year in the evening course, which attracted several students. And one challenging aspect about the taxation is that the teachers who are teaching the taxation or the students who are learning the taxation, they have to be on their toes forever, because they have to upkeep themselves in various new amendments and new reforms that come in the way. And every year is a challenge for them. They have to upgrade themselves. And definitely the workshops like this will help the faculty as well as the students to learn more about this. And this particular workshop is being taken up under the caption that is financial literacy. Let me just use one word to tell you like how tax literacy is a part of the financial literacy. Financial literacy is nothing but taking informed decisions for the benefit of those who are taking the decisions in such a way that their returns are high and risks are low. And while considering these financial decisions, the financial literacy being, takes into consideration the budgeting, the investments, and the savings. Definitely, tax comes into picture because we have got various tax incentives, wherein using by these tax incentives while investing or while saving, we can reduce our tax burden. And especially for this assessment year onwards, as we are into two types of assessment where you can go by the old system or where you can opt for the new system, we have to decide as to which particular system we have to take up in the beginning of the assessment year itself. Therefore, keeping in view all these things, this workshop, which is taken up as a part of the financial literacy, is fully justifiable. And I appreciate my younger colleagues, Dr. Ravi and Dr. Sandhya, for taking up this and also, giving a practical approach to this, and including GST. It is not just income tax, but this particular workshop is concentrating on GST too. Therefore, these two things being, some of the important areas of taxation, definitely this workshop is going to be helpful for the students as well as for the teachers. And I'm sure that they have chosen the best of best resource persons, as mentioned by Dr. Ravi. And once you listen to them, you'll get, nitty-gritty of all these decisions, financial decisions, how you have to take, keeping in view the taxation in mind. And as a part of this program, I would like to announce, of course, after taking the permissions from the university and also after discussing at our department level, we may start a consultancy program in taxation area. That is something like, making our students learn how to file the returns, and already this work is being done by some of our colleagues, I know. And we make it, officialized with the permission of the higher authorities at university as a part of this platinum jubilee year. And definitely we will offer this particular consultancy to the teachers and non-teaching staff of university and also to the outsiders. The only thing is we have to make an application and then take the permissions. I hope Professor Gopal Reddy will be appreciating us for this. With these few words, I wish that the program will be a grand success and will add value to the people who are listening and the students who are, aspirants of becoming tax consultants or, something like that. The resource person who will be sharing their knowledge, in all schools. I wish that the program becomes grand success. Once again, I appreciate Dr. Ravi and Dr. Sandhya for taking up this. And I thank on behalf of the department, the coordinator and co-coordinator for taking up this particular proposal into consideration and granting the finance. And definitely the coordinator and co-coordinator, you will be getting, queues of applications from the department because this is a departmental program. And all these programs will be of great help to the society. Thank you very much for giving me this opportunity. Thank you.
Thank you so much, ma'am. Thank you so much, ma'am, for sharing your views and for emphasizing the importance of tax to all. But for sure, we'll take up the consultancy services, the various tax courses which we have been taking up at Department of Commerce, and also for encouraging us to take up this workshop by providing all the support and encouraging us. Now, I invite our energetic chairman, Board of Studies, Professor Prashant Atma, to address the gathering. Professor Prashant Atma has more than 3 decades of teaching experience and has published more than 80 research articles, written many lessons, edited and published 25 books on various subjects of commerce, and have undertaken 4 minor research projects. She has been conferred with Best Faculty Award by the Institute of Practical Accountancy and the recipient of Telangana Best Teacher Award. She is also the recipient of the Gold Medal and the Silver Medal for the Best Paper Presentations at All India Commerce Conference, received the Best Paper Award twice at All India Accounting Conference, and also has received many more awards at different conferences and seminars. She has occupied various positions like Principal at Koti Women's College, Head Department of Commerce, etc. I request ma'am to address the gathering. Over to
Thank you,
Prashant.
Sandhya. Thank you, Sandhya.
Welcome.
The chief guest for today's program, Professor C.H. Gopal Reddy, Registrar of Osmania University. Guest of honor, Professor Sriram Venkatesh, Controller of Exams and Nodal Officer, RUSA 2.0. Keynote speaker, Sri Ravi K, Deputy Commissioner of State Tax, Commercial Tax Department, Principal of our college and coordinator. Then Dr. Naresh Reddy, co-coordinator, functionaries, Dean Faculty of Commerce, Professor V. APPROA, Head Department of Commerce, Professor Usha Kiran, Program Coordinator, Program Convener and Program Director, resource persons, my friends in the department and from colleges affiliated to Osmania University, resource persons, ladies and gentlemen, a very good afternoon to you all. At the outset, I would like to congratulate my scholar teachers, Professor Ravi, the program director, and Dr. Sandhya Rani, program convener, for taking up in organizing this particular program, Financial Literacy on Tax and GST, which is of interest for everyone across the faculties and even to a common man. We don't mind working hard to earn income, but we hardly feel like paying tax. The taxpayer definitely feels that payment of tax is a burden and it's human tendency to reduce the tax or to avoid the tax by availing the deductions, exemptions, and benefits given by the tax department. And this is legal because it amounts to tax planning. Every person who has a taxable income should declare income, pay tax, and file the income tax return on time in order to avoid and penalty. More than 5 lakh or who would like to claim tax refund has to file the returns mandatorily online. Several forms have been prescribed depending upon the status of the income tax payer and the source of income. We all know that Form 16 given by the employer shows the income earned, that is salary earned and tax deducted source. Form 16A given by bank for the interest paid by them and the tax deducted source. Form 26A is a summary of all the taxes paid, advance tax, self-assessment tax, tax deducted source, then bank statement, PAN card, Aadhaar card, and a proof of tax saving investments are to be kept ready before we file the income tax return. While direct tax is related to paying of tax on the income what we earn directly to the government, indirect tax is collected by somebody else from us and then paid to the government. The year 2017 will be remembered as the year of implementation of a great major reform in the form of GST, which is a replacement of various indirect taxes like VAT, CST, service tax, excise, customs, and so on. And we have the slogan, one nation, one tax. And I would like to say that we should not feel tax as a burden, but feel that it is a price for civilization. A fine is a tax on doing something wrong, but a tax is a fine on doing something right. Let us all pay tax and prove that we are on the right. I'm sure in this webinar, definitely various issues relating to the tax would be discussed and a clarity would be brought about on the concept of GST, its implementation and implications. I would also like to say that we all require to acquire financial literacy on tax because we are directly or indirectly connected with payment of tax. I once again congratulate the organizers and I'm sure that this would be a success and I wish you all a happy learning. Thank you.
Thank you so much, ma'am. It is true, ma'am. We all look for the various exemptions, deductions, rebates, reliefs to minimize the tax liability, thereby doing the tax planning. Thank you, ma'am, for providing the gist of the whole Indian taxation system in your 2-minute talk. Now I request the guest of honor, Professor Sriram Venkatesh, to speak a few words. Professor Sriram Venkatesh has conducted many workshops and training programs. He is a resource person for many seminars and conferences. Life member of professional bodies, visited many countries and presented research articles. He has rich administrative experience and has worked in various capacities at Usmania University, such as Chairman Board of Studies at Mechanical Engineering Department, Director, Center for Prototyping and Testing of Industrial Products, Director of Evaluation Examination Center, Additional Controller of Examinations, Additional Chief Warden, to name a few. He has been conferred with Career Award for Young Teachers, a research fellowship for 3 years by All India Council for Technical Education. I request Sriram sir to address the gathering. Over to Sriram sir.
Sir, unmute yourself, sir.
అన్మ్యూట్ చేసుకోండి శ్రీరామ్ సార్, అన్మ్యూట్ చేసుకోండి.
No, it not come. Okay.
Now, okay, sir.
Sandhya man, chief guest of today's function. I'm audible.
Yes, sir. Yes.
You're audible, sir.
Chief guest
Yes,
of
sir.
today's function, Professor C.H. Gopal Reddy Garu, Registrar Usmania University, Principal Professor D. Chennappa, and Professor V. Usha Kiran Madam, Head of the Department of Commerce, and Dean Faculty of Commerce, Professor V. APPROA Garu, and today's guest of honor, Sri Ravi K, Deputy Commissioner of State and Commercial Tax, and Professor Prashant Atma, Chairperson Board of Studies, Dr. Ravi Kumar Jasta, the Program Director, and Dr. G. Naresh Reddy, Co-Coordinator, Dr. B. Sanjay Rani, Program Convener, and other dignitaries, and all the participants. Good afternoon to all of you. So I congratulate the principal, head, and the coordinators, those who actually coined this particular title, Financial Literacy on Income Tax and GST, a Practical Approach. This is very, very useful to all of us, right from the lowest taxpayer to highest taxpayer, including business persons, is very important, useful, and particularly industry people also very useful. And nobody is actually having, many of us, we are not having knowledge on how to get the available benefits and available exemptions and available the rules of tax paying. So for example, as an loan borrower, I got an interest payment of, let's say, 1.5 lakhs per year. So our these tedious people, they say that no, we will allow only up to 1 lakh. So after that, no, the income, the interest exemption is increased to 2 lakhs. But in spite of that, no, our people are allowing only up to 1.5. So these things we do not know. Suppose if you know that, no, you will get the benefit of it. So otherwise, so being a salary holder, we are paying the tax. Unknowingly, we pay more tax. So nobody will give us unless you file a tax return. So that's why it is essential to know the in and out of all the tax. It is always changing dynamically every year. So like the judicial system, no, lawyers and judges, how they read the court, the judgments, no. Similarly, in India, every year there is a change in some rebates or some benefits given by the government of India. So that we have to update ourselves. So I think we can also, I think we can put this particular topic in our curriculum, so that more number of students will be benefited out of this particular topic. Particularly, according to Global Financial Literacy Center of Excellence, they are saying, no, only 24 Indian adults population are having financial literate. So that means rest of the adult population in India not aware of the financial literacy. So according to the National Center for Financial Education report, reported in 2015, the Gujarat is having highest financial literacy of 83%, and whereas the lowest the financial literacy percentage of 4% in Chhattisgarh. So you know the reason for having highest number of literacy uh, adults or persons in Gujarat. So they know better how to they handle the finances, and without the knowledge of finance, no, they can't earn money. So it is under everybody knows that no, they are actually almost all the country, even other foreign countries, no, they are almost dictating the terms in terms of the business. So I will tell you one thing now, one live example in examination branch. One employee is retired 3 months back, and he was actually on roads because he's a only contract employee. He doesn't get any the pension. So he was crying and pleading me that no, I want a reappointment. So saying that no, why reappointment? Already I've served 33 years of service now in the examination branch in CD or somewhere else. So he was replying that no, I got children and I not have not planned anything, and tomorrow also I don't have any food. So this type of people are so there, having served 33 years of experience in the government service. Maybe he got less amount of money, but he is very poor planner. So whatever the amount he gets, he should have been planned in advance. What is future, what is present, and even after the superannuation, he will not get any pension. So poor planning leads to he is now is on roads. So like people now they are there, and they depend upon only daily income. So every time, every even the income is 500 to 5,000 or 50,000 per day, they must plan properly to not only to save the money but also plan accordingly in future. What is going to the expenditure for our children, and we need not earn so much, but at least we have to lead a normal life without suffering from the even essential and basic needs. And in the income tax, GST, goods and services tax, so the 1 week back, we are ready to buy one software. The software, what I want is how to generate the invoice, tax invoice, and also we can pay, how to pay. So in the market, there are 10,000 rupees, 15,000 rupees is the minimum amount to be paid for buying one particular invoice tax. But one guy, he has advised me, sir, you are also paying GST. Your center is also having GST registration. Why you are going for purchasing? This is free of available, free of software. It is downloadable. Once you press you enter your GST number, automatically the software will be activated. Only thing is we have to modify according to our center name, mobile number, something like that. So we saved 10,000 rupees. So that software we can use it for generating of income tax, pro forma, whatever we do. And whatever we buy, for example, we are buying some articles, we are paying GST. That GST also will be added into the software, and it will be a benefit for us when we sell the goods. That tax will be added, and with that, no, we are actually happy to use that particular software. That is called Joho. Joho is a software free of cost. Only after 1.5 crores of turnover, after that only they will charge nominally. So such things we don't know. That's why it is very essential to know the financial details. Maybe it's a subject of commerce, but it is everybody must know minimum knowledge of it, at least to file the income tax return. So from the Joho software, simply click a button, we can submit to the CA so that you can simplify. So many of us, we are depending upon CA or some consultant, and we are paying some amount to him, and he will be filing. So they will give us some benefits. They will give information regarding what is the benefit you are going to get it out within the framework. When I went to the US in Chicago airport, I purchased 2 bananas. I was hungry. I purchased 2 bananas. Bananas also, he gave a slip. In the slip, the tax is mentioned. So in India, such situation should come. Even a roadside vendor should pay tax. Okay, after all, we are paying to him and he is paying to the government. So if situation comes, every article, right from $1, what they are implementing, $1 of 50 cents. So from that point of in India also, if everybody pays tax on a roadside or something, so India will prosper like anything and GDP will rise like anything. So if you look at some of the markets in Hyderabad, uh, totally zero business. Okay, just to simply say that the pro forma invoice or some estimation, something like that. So because of GST, so these slowly it is they are coming under the GST and not like earlier. So now the income is growing like anything. So this is actually a small message and my practical experience I'm giving. And at the outset again, I congratulate the principal and his team members. So this I think second the program conducting under RUSA 2 Center of Excellence sanctioned to the Department of Commerce. So this program will be immensely benefited to the all the participants. Around 240 participants are there, and it shows that the interest they have shown in registration of this particular program. So thank you very much for giving me opportunity. Particularly thanks to the principal and coordinator, co-coordinator, and the head madam and chairperson madam. Thank you, madam.
Sir, thank you very much. But this is not the second program, sir. It is the third program. One is from Commerce, another one is from Department of Business Management.
Not audible, sir. Not audible.
Third 7-day webinars under college, under the college, under the 2 mini RUSA centers.
Yeah. Yeah, so we have organized 3 programs under RUSA 2. That is what our principal sir was trying to communicate. Thank you so much, Sriram sir, for your valuable message. The main purpose of organizing this workshop is to create an awareness among the participants on various aspects of tax, which is an interesting area for all of us. And yes, so we need to keep updating the tax laws with amendments being brought about. Thank you so much, sir, for being with us and for accepting our invitation and also for enlightening us with your statistics on financial literacy and also many other softwares relating to filing of tax returns. Now it is the time to hear from the chief guest of the inaugural, a very friendly and approachable person, Professor C.H. Gopal Reddy, Registrar of Osmania University. Professor Gopal Reddy has completed his MSc and PhD from Osmania University. He was awarded UGC NET Fellowship and is working as a faculty member in Osmania University since 1997. He has completed research project funded by Atomic Energy Regulatory Board and DST PERS research project. He has 42 research publications and attended several national and international conferences. He is a life member of many other institutions of national eminence. He has a rich administrative experience and has occupied various positions in different capacities. I invite Gopal Reddy sir to give his inaugural address. Over to Gopal Reddy sir.
Sir, unmute చేసుకోండి.
Yeah. Thank you, madam. Thank you, Dr. Sandhya. Of course, I'm very associated with this program. Professor V. APPROA, Dean of Faculty of Commerce, Usman University. Professor Chennappa, Principal, University College of Commerce and Business Management. My other colleague, Professor Sriram Venkatesh, Controller of Examinations and Nodal Officer, RUSA 2.0. Sri Ravi Garu, Deputy Commissioner, Commercial Tax Department. Professor Usha Kiran Madam, Head Department of Commerce, Usman University. Professor Prashant Atma Madam, Chairperson, Board of Studies in Commerce, Usman University. Dr. G. Naresh Reddy, Co-Coordinator, that is Center for Promotion of Financial Literacy under RUSA 2.0. Dr. Jasti Ravikumar, Program Director. Of course, Sandhya Rani Madam, the Program Convener. Other colleagues from the department, from university and distinguished participants. I think participation is overwhelming. I think around 1,000 have registered and almost 220 are now present in this webinar. It is an important webinar, as been said, under RUSA 2.0. This is, I think, third program being conducted. But other than this, the Department of Commerce in particular and the College of Commerce and Business Management in general, it is well known that this department is conducting several programs on various contemporary issues. I too have attended so many programs from this department on various issues. But it's an important department, Department of Commerce and Department of Business Management. It is actually part and parcel of the commerce and management, part and parcel of every human individual, whether they are educated or uneducated. We know that coming to this financial literacy, every person, whether literate or illiterate, knowingly or unknowingly, he or she will be doing many financial transactions on day-to-day basis. And also every person in this country, they are paying tax directly or indirectly. They're contributing to the growth of the nation. And therefore the knowledge about this financial literacy, particularly the taxation rules, is very much needed for every person. But as Sriram Venkatesh has been quoting, only 24% of the population. They are slightly, I actually doubt that also, that percentage also. I think very few people must be knowing about these taxation rules. And in fact, we are all part of the university system, higher education system. You see, I think many of our teachers, leave alone the non-teaching staff who are slightly less educated than us, we normally go to a tax consultant to submit our tax returns. I hope at least the Commerce Department, all the faculty members from the Commerce Department are submitting the tax returns on their own. But when it comes to the other departments, I am from science actually. Many of our colleagues from the science, from the social sciences, from other faculties, come June, now I think it is extended to December, we rush to a tax consultant to submit our tax returns. The reason is that we are technologically, we are sound. Nowadays, everything is online. But even then, we go to a tax consultant because of the clumsiness in the tax return forms and tax rules also. And there are, of course, so many deductions we have to do. So much of tax rebates are there. How to avoid the tax? That means avoid means it is not illegally, but even legally also. How to save the money. So because of that, we go to a tax consultant. But my wish is that I would like to see that this tax return, whatever it is, whether it is in our case is direct tax, but in the case of indirect tax system also, it should be transparent and also it should be simple so that a normal literate person or even an illiterate person should be able to follow these rules. And I think that system has to come. And in that direction only, this GST is now introduced. It's a one tax kind of system. But of course, in some area, like we all know that in the case of this petroleum products and all that, the GST has not been implemented so far. I don't know why, except in petroleum, this thing. But in all other cases, it is being implemented, and people are also happy. So it is. So the thing is that every common man must be able to manage their financial planning to protect from risks. If you see the olden days, if you go back to the previous generation or in our generation also, when we were our fathers and forefathers, there was one and only one planning was there actually. Every person used to go for the LIC insurance. You all know very well that in the villages, it was LIC is very, very popular actually. It is included into the village, this thing. Even an illiterate person, if you take, he used to go for this LIC policy. And people used to treat this as an investment plan rather than an insurance plan. Now, there are people who actually, without every person used to do that. And of course, to some extent, some other insurance company was there known as the Peerless. I think many of you must be knowing. So people, mostly they used to go with LIC and then this Peerless kind of thing. But now, of course, with the entry of the private players in the insurance sector, we are going for many other private organizations. And also the other thing is that we are also now, awareness has been increased regarding the health insurance also. Many of our people, of course, literate people or even the rural masses, they are also now going for the health insurance, this thing. So I mean to say that every person in the society is a taxpayer, either directly or indirectly. And of course, Government of India is also every year they have been trying to simplify this tax regime. And it is our duty as educated people that we should also see that our rural people, particularly the people who are in need, they must get sufficient awareness. I just now, Usha Madam has proposed that she can go for some kind of department, can go for some kind of consultancy, at least to our own people, our university people, our teachers and our non-teaching staff, in some cases our students, so that the department can create an awareness, and also department can offer a kind of consultancy to all those who are in need of this financial literacy. And because nowadays this awareness has been increased actually regarding the investment planning, because there are so many investment products are there in the form of so many things, from starting from the direct to fixed deposits in the bank to so many other investment products, coming to even the government bonds and all that. So a kind of awareness has to be created regarding the associated risks also, because now many of the products are now linked to the securities. So risk factor is there, and that has to be, that kind of awareness has to be created. And also just now I told you that in the filing of tax returns, where they can save, how to save actually, because just now Sri Ram Venkatesh was narrating a person who has worked for 33 years and then next day is is not having anything. So that kind of thing should not happen. So that kind of awareness can also be created, because the Commerce Department is very strong in the university, we know, and very young and dynamic teaching faculty is there, starting from their principal to other young teachers. So I think something can be done to it's a kind of outreach actually to us also. Outreach is must. So let us try to do create some kind of awareness, and also try to offer some kind of consultancy to the people who are at least our own people. So try to see that. So you can, instead of you always you are conducting some workshops, some kind of seminars, some kind of conferences, symposia. In the similar line, you can also plan to conduct a kind of awareness camp to our own university teachers. I think that will benefit our people. So with these few remarks, and I think there are about 20 lectures are planned by distinguished people. And I also request the department to bring out a kind of proceedings so that it will be useful for our researchers. That is also needed. So with these few remarks, I appreciate the initiative taken by the Department of Commerce and Ravi Kumar and Sandhya Madam and the Principal Chennappa for taking up this program to create awareness on financial literacy to the other people who are in need of that. So with these few remarks, I wish the conference all the success. And finally, I'm thankful to the organizers for making me a part of this program. Thank you. Thank you very much. Thank you.
Thank you so much, sir, for your message. At Department of Commerce, we the teachers file returns by all ourselves. As our head said, we may even try to take up the consultancy services in this regard to others too. Thank you so much, sir, for all the support and encouragement which you always extend to the Department of Commerce. In spite of being occupied with other important works, you have accepted our invitation. Thank you so much, sir, for sparing your valuable time.
Thank you, madam. Thank you.
Now, may I invite the keynote speaker, Sri Ravi K. the Deputy Commissioner of State Tax, Commercial Tax Department, Charminar Division, to address the gathering and share his valuable experiences on the subject with all of us. Sir has a rich administrative experience and served the tax department in various capacity. I request Sir to share his expertise talk. Over to Ravi, sir.
Yeah, good afternoon, ladies and gentlemen. Am I audible?
Yes, sir.
You're audible, sir.
Thank you. Thank you. So at the outset, I would like to congratulate Department of Commerce, Osmania University, on the occasion of their Platinum Jubilee. I would also like to congratulate the Department of Commerce, OU, for organizing this kind of financial literacy on both the direct as well as the indirect taxation, which is a 7-day course, and I think most of the people, they get benefited by this one. Regarding this, while speaking, most of the speakers, they told something about the tax complaints, tax burden, tax planning, and all these things. And of course, these are the words which we'll be using in the practical sense. And then usually, a common man means in terms of a common man, tax means income tax. But income tax is, as you know, it is only paid by a few people who are only earning some salary or income. But an indirect tax is a tax which is paid by almost everybody. In this regard, I'll just, I would like to repeat the words what our registrar sir has just now uttered. He told that every person is a taxpayer, either direct or indirect. So if you are a salary earner, then okay, you have the liability towards the direct tax. But indirect tax, everybody, every citizen of India, every person who is staying here, we are paying the indirect tax in one form or the other. So there is every need for giving wide, publicity, or whatever the name we call literacy, or what awareness. So this thing is required for the indirect taxation. And as our HOD madam already given us the introduction, 2017 is we can call it as a different kind of thing. That is a cutoff date where we have completely transformed from the old multiple taxation era to the new GST era. So since 2017, we have a single taxation with respect to our indirect tax, that is GST. So where, as everybody knows, maybe IGST, CGST, SGST, different kinds of things. So we have the GST aspect now. And I'm happy that even GST is also covered in your this workshop. Now coming to my this thing, just I would like to share my small PPT, wherein I would like to have a small introduction to the GST and its impact, how we are facing in our day-to-day this thing, administration. Okay. Yeah, ma'am, can you allow me to for screen sharing from the host?
Yes, sir. Look, 1 second, sir.
Sir, give the course to sir. Ravi sir. Co-host, make as a co-host.
Yes, sir. Yes, sir. Done, sir. Now we can share, I think. Yes.
So is the screen visible?
Yes, sir. Yes, sir.
Fine.
Yes, sir.
First, we'll just See, everybody knows earlier before GST, we had multiple taxes and all these things. The main reasons why we have to switch on to GST is first one is to avoid the cascading effect, wherein we were having tax on tax. So there were multiple taxes and also there was a tax on another tax. See, on certain transaction, if service tax is levied, again on that VAT is levied. So such kinds of things were there. That is the first thing. Second one, to have a common national market, wherein from one state to another state, if something has to be moved, then it requires certain permissions, particularly like when it comes to agriculture commodities. So you can't sell here, you have to sell. There are certain restrictions. So we wanted to do away with that. And then there have been the most important thing which generally we have in the practical aspect is ambiguity in levy of taxes, particularly when we come for works contracts or even the other services like restaurants or something there. There we have the material component as well as the services component. So whether VAT is to be levied because material is there, it is dominant, or whether service tax is to be levied where services are dominant there. So there was an ambiguity. On the same turnover, we were levying VAT and service tax people, they were levying service tax. So these were the major things where we were stuck up in respect of certain transactions. So this, of course, among us, others, we have other reasons also, but these are the main reasons why we had to switch over to the GST. Whereas the features of the GST which we have adopted in India, as everybody knows, goods and service tax is a tax that is levied on the supply of goods or services, and it is a destination-based consumption tax. Means the state wherein we are just consuming the goods or the services, finally the tax gets accrued or the revenue gets accrued to that particular state. And to ensure the proper accrual of this tax and how to levy, the policy matters, administrative aspects and everything, an apex body called GST Council had been constituted by virtue of the constitutional amendment. And this GST Council, which consists of the Union Finance Minister as the head and all the finance ministers of all the states and UTs are the members of the council. And there were several multiple taxes and duties that were subsumed, as one of our speakers has rightly pointed out. 17 taxes and duties are subsumed into GST. And while levying GST, we have two aspects. That is, within the state, if somebody has to pay this GST, they'll be paying as a CGST and SGST. And if it is related to a transaction between one state or other, it is integrated GST. We call it as IGST. I'm not going into depth in any of these things. Just I'm covering the overall aspects. Okay, because all these things will be depth. They'll be covered in depth in the sessions they are about to come. And then the other features include, we wanted to ensure uniform tax rate across the country. There are some 5 to 6 tax rates, right? So say 0, 3, 5, 12, 18 and 28. So here, suppose if we take 18%, if it is an interstate transaction, we will be levying IGST as 18%. If it is a within the state transaction, we'll be levying 9% and 9% as CGST and SGST. And one basic, more important aspect is related to compensation cess. Constitution has provided for the compensation cess, and they have made it statutory, because see, tomorrow the governments may not be able to pay that compensation, or they want to get rid of that and all these things. So to avoid that, they have made it a part of the statute, and Compensation Cess Act is also enacted, wherein the center is supposed to make good the losses that the states may incur due to the revenue loss. And then seamless flow of input tax credit across the country from one state to other. Also, if there is a movement of goods or services, earlier there was some restrictions, or they were not able to claim the input tax credit, particularly with respect to VAT or whatever we call central sales tax. But within state, we used to have the input tax credit, but now we are allowing it across the country. IGST can be adjusted against CGST and SGST and vice versa. Then the other important feature is self-policing mechanism. See, a person who makes a supply, maybe supply of goods or services, he can claim the input tax credit, and he can even show the his outward supplies and make the tax payment, and everything will be captured and everything will be correlated and they will be reconciled with each other, so that whether his input supplies are correct or his outward supplies, they are correct and all these things. So we have an internal mechanism wherein we have all these checks maintained. And then GST network is built up wherein, see, it's a corporation that has been set up for maintenance of all the e-returns or the e-waybills or the e-invoicing system, whatever the thing is there, they are integrated with this GST network, wherein we can get the registration done. GST, one can have access to the filing of the returns as well as the e-waybills and all these things. And then we have the other one is compliance rating. As somebody was pointing out, so tax compliance is the most important thing. And more particularly in case of indirect taxation, the tax compliance was at the worst in the pre-GST scenario. We were particularly going through a different kind of, monitoring system or something like that, because the compliance levels were very less. But now the compliance levels need to be mandatorily, they must be maintained, because everything is under watch in GST. So based on this, in spite of that, if anybody is trying to do some mischief, then he will be caught easily and he will be rated accordingly. So suppose he wants to avoid returns, he wants to avoid e-way bills and all these things, then he will be watched and he will be rated accordingly. And based on his rating, his businesses will also be adversely affected. So these are the main features of GST. And after covering the main features, let us just see, since 2017 July, this GST was introduced. Now it is almost 3.5 years. What is that we have achieved in these 3.5 years? See, we see that the tax base, nearly it has increased by 60% within 3.5 years. Means almost earlier it was around 65 lakhs of taxpayers were there at the time of migration. Now we have about 1.05 crores of taxpayers as of now across the country. And also out of that, we know that threshold limit is 20 lakhs. If 20 lakhs is crossed, the turnover per year has crossed 20 lakhs, then he must take registration. But even below threshold limit also, one can have his own registration, and gradually it is also increasing, which shows that, okay, GST is having the impact on the compliance levels. And then exports have increased by 13.4% based on the, refunds are being processed at a faster rate, and the exports are also, which are related with these refunds under GST. So because they are getting the refunds at a faster rate, then automatically they are encouraging the export. Regarding revenue front, the gross GST collections have also increased, as just if we take only 2 years data, that is 2018-19, it was 11.77 lakh crores. Now in 2019-20, it is 12.2 lakh crores. So which also shows how the GST is, moving forward. Still, we have certain challenges in our own, the process of the implementation of GST, which we are trying to rectify, and rather we want to resolve them. Mainly at the initial times, we were having certain teething problems, particularly with regards to GST network. The network was unable to handle the forms, the returns and all these things. So gradually they were now resolved. And earlier also there were certain issues that were raised. GST network, GSTN was unable to tackle, but now they are ready to tackle. They are addressing with every grievance that is raised nowadays. So the second most important thing is, there is a complaint from states, which we generally see in our regular newspaper also. We are seeing that there is a complaint from almost all the states that center is not releasing the compensation. That is the loss. Actually, if a state is performing less than 14% growth rate when compared with the base year as 2015-16 they have taken, based on the base year 2015-16's revenue, the growth rate should be 14%. If a state or UT maintains below that, then it must be compensated by the center. And to fund that particular compensation, this Compensation Cess Act was enacted. And now, in spite of this kind of all mechanism made, there is a complaint that center is delaying the release of compensation, which is also now it is under the active consideration. The next thing is increasing number of fraud cases. See, many of the issues we are observing fake invoices and fraudulent ITC claims, and there are fraudulent export claims which they are making. And for that, the mechanism is being evolved, and the enforcement authorities and the EIU authorities, wherever they are, economic intelligence units are established in almost every state to tackle with such menaces, and we are after them. And we are seeing nowadays, because in the earlier days we had hand holding. So now the hand holding phase has completed. Now we are taking stringent action against the defaulters who just intend to have a fraudulent intention. And one more challenge which we are facing nowadays is the frequent amendments to the act and rules, because it is an evolving act. We are having, every now and then, every maybe month or 2 months, we are seeing there is some sort of amendment in the rule or some amendment in the act, and some notifications, circulars, orders, they are being issued. And this is what a Hercules task for the implementation authorities. But anyhow, we are planning to tackle it by way of organizing the trainings, seminars, and all these things. So with this, I'll just conclude the overall view of the GST. And I suggest that, see, the basic things is inputs you will be providing, like what is GST and all these things, no doubt about it. But to the persons who are participating, it is also important that you get updated from time to time what is actually happening in the GST. And once again, I'll congratulate the Department of Commerce for organizing this kind of workshop. And I hope such workshops to continue in future also. And I thank one and all for the opportunity given to me. Thank you, sir. Thank you, ma'am.
Thank you so much, sir. We totally agree that most of us are aware of the income tax rules, but the awareness is low in the case of indirect taxes, and there is a need for creating awareness by organizing such workshops and programs. Your talk on GST was very lucid and crisp and easy to understand with statistical facts. Thank you so much, sir, for sharing your valuable practical experiences with all of us. Thank you for accepting our invitation to be the keynote speaker of the inaugural and sparing your valuable time. Thank you, sir. Now, with this, we have come to the end of the inaugural. On behalf of organizing team, I place on record our indebtedness to all the functionaries and dignitaries for supporting and encouraging us to make this program happen. Now, I request Ravi sir to propose formal vote of thanks.
Yeah, thank you, Sandhya. Uh, so at the end, I thank all the functionaries and the chief guest, Professor C.H. Gopal Reddy, the Registrar Usmania University, for his valuable message and accepted to be as a chief guest for this inaugural session. So thank you, sir. Thank you for your valuable the guidance and the suggestions for this workshop. I'm also thankful to Professor Sriram Venkatesh, Nodal Officer and Control of Examination, for his sharing experience. So what is actually going on in the society? He's being a science teacher, and is sharing a valuable thing, like what is actually happened in the society in terms of GST and in terms of pension and all the things, investment and all the things, for giving the wonderful the message. So thank you, Sriram Venkatesh sir, for giving the wonderful message. I thank the present keynote speaker. Just now you listened him about the total GST, and is presented a wonderful the keynote address on the GST. So thank you, sir, for sharing your the valuable experience on the GST which was introduced recently in India. So I thank Professor D. Channappa, principal and coordinator of RUSA, for not only sharing his organizing this occasion, and also for the financial support to organize this workshop. Whenever I approached the Professor Channappa for to organize this workshop, he immediately agreed to say yes. In his routine lifestyle style, he said that go ahead, yes, we are going to support in terms of finance. We are going to ready to give. so that go ahead with this workshop. So thank you very much for Channappa sir, and I'm also thankful to my friend Dr. G. Naresh Reddy, co-coordinator, for his guidance in the preparation of this workshop. So thank you, Naresh sir. I'm also thankful to all my senior colleagues and functionaries in the department, Professor V. APPROA, Dean, Faculty of Commerce, and Professor V. Ushakiran, Head, and Madam also giving always supporting me to prepare everything from the preparation of the resource persons and to the program sheet and everything. So Madam is always supporting or encouraging me to organize this workshop. And my guide, Usha Karma, chairperson, board of studies. So Madam always encouraging me to come for this type of workshops or seminars and all those things. So thank you very much for all my the senior colleagues for encouraging me, and Sandhya for organizing this workshop. I'm also thankful to all the resource persons readily agreed to deliver the course or the material in this workshop coming 7 days. I'm also thankful to my senior colleagues like Usha Madam and other colleagues from Tamil Nadu, Renkam Madam and Murali Sir and all the chartered accountants, Chandrasekhar, and all the resource persons are ready to agree to deliver the goods in this workshop. I'm thankful to the Venkatesh, who is providing the technical support from last the 10 days. He is supporting me and is giving the guidance in terms of this preparation of this Google links and maybe invitation cards and everything. He is supporting. And thankful to Batu in the programmer from the Department of Commerce for sending the mails, messages, and the technical support what he is extending to this work conducting of this workshop. And also non-teaching staff, all the non-teaching staff like Vinay, Sarla, Durga, and all the nursing and all the other staff for their secretarial support. Finally, last but not the least, I thank all the participants. Actually, the participants have registered the more than 1,000. Okay, but here the patiently the 250 people around their participated in the Zoom link. All the remaining people are watching the YouTube live streaming in another live mode. So I thank all the people. So once again, I thank all the university administration and the department functionaries and all the participants and all the people who are helping me to coming out with this workshop. Thank you once again. Thank you all. Thank you, Sandhya.
Yeah. Thank you, Ravi, sir, for that. With this, we come to the end of the inaugural session. Dear participants, thank you for keeping patience. Thank you, one and all. We will immediately start off with the first session on fiscal policy and Indian taxation, followed by the second session on tax reforms and research areas in taxation. The resource person for both the sessions is retired Professor Dr. M. Usha. I think ma'am has already joined. Usha ma'am, good evening.
Madam, your voice is not.
Madam, unmute yourself, madam.
Professor M. Usha is a retired professor. Is retired as a professor of commerce from Osmania University with a total teaching experience of 41 years. Presently, she is serving as chairperson, Andhra Mahila Sabha, Autonomous College, Vidyanagar, Hyderabad. Her areas of specialization are development studies and marketing. Madam has published many books and research papers guiding PhD scholars, completed UGC-sponsored major research project on tax reforms. She is a visiting professor to a few colleges and universities, consultant for quality assessment of colleges, governing body member in a few colleges, advisory member to a few NGOs, and is a member of several professional bodies. Thank you, ma'am, for being part of this program. I request you to take over the mic. Over to Usha, ma'am.
Thank you, Dr. Sandhya, for the brief introduction. I wanted my introduction to be more brief because we are already late.
Yeah, yes.
Good evening, all the participants of this 7-day workshop. First, let me warm up for understanding the composition of the participants. Are there students or only staff or faculty of different colleges or practitioners? Because based on that, I would like to change my presentation, Sandhya.
Students and faculty, more of them are students and faculty, madam, not practitioners.
Okay, students and faculty. Fine. So, good evening, the Department of Commerce, Professor APPROA, Dean Faculty of Commerce, Professor Prashanta, Chairperson, BOS, Professor Usha Kiran, Head Department of Commerce, Professor Chennappa, Principal, UCCBM, Dr. Ravi Kumar Jasti, Program Coordinator, Program Director, Sandhya Rani, Program Convener, Naresh Reddy, Coordinator, and the earlier inaugural session, we had Professor C.H. Gopal Reddy, Registrar Usmania University, and we had Professor Sriram Venkatesh as guest of honor, and the keynote speaker, Ravi, who is the Deputy Commissioner of State Tax. I am very happy to share the platform with you all. And I'm happy for giving me this opportunity, especially Dr. Ravi, who invited me, and Dr. Sandhya for coordinating this program. We all know that COVID has left the universe not only in health crisis, but the crisis is felt on almost all the sectors of the economy. Education sector is no exception. Educational institutions started recognizing the transformational power of digitalization, and they have changed their business models in response to students' demands and also the competitive pressure. I firmly believe that an institution's future is dependent on enabling the faculty, the students, and the staff by making everyone a stakeholder in collaborative learning. And this 7-day online workshop is in that direction. The onus is on the higher education institutions, especially on the teachers, to prepare their students in a way that they are globally relevant and yet sensitive to the needs of the society. Transforming of our institutions of higher learning into centers of excellence is the key challenge that we are facing right now. An important component of universities and colleges is to have a reservoir of inspired teachers who can ignite the minds of the students and faculty and encourage them to think out of the box. With ever-evolving techniques in education, traditional teaching will not suffice. With these thoughts in mind, I would like to pen down my appreciation to the entire team of Commerce Department for organizing this 7-day online workshop on financial literacy on income tax and GST, a practical approach. This is a very relevant yet debatable topic with multidisciplinary approach, which can educate and ignite the young minds to think out of the box, for which they need to acquire knowledge on various subjects. I thank the Department of Commerce for giving me this opportunity, especially Dr. Ravi, Program Director, and Dr. Sandhya, Convener, for inviting me to the workshop as a resource person. I wish the outcome of this workshop will be of great relevance to the participants and policy makers. With this brief introduction, I would like to ask the participants, because the organizers have given me 2 technical sessions. The first session I thought I would cover on fiscal policy and Indian taxation system. And the second technical session would be on tax reforms and researchable areas in the field of taxation. So can I ask the participants the choice? Would they want to hear about the researchable topics first? Because tax reforms, most of them have covered very briefly. And Indian taxation system, we can take up in the next session. So what would be the choice of the organizers? If you can tell me, I'll start with that.
That is up to you, madam. No issue at all, because they cannot. We all are muted. Participants cannot be answer here because of reduce the nuisance. We muted all the.
Yeah, but I am getting some answers here saying researchable areas should be
Yes,
the
yes.
first
Yes.
preference.
Start. Okay.
So shall I start with the researchable areas in taxation?
Yes.
Sure, ma'am. Go ahead.
So that with a gap, we can have the second session on tax reforms.
Sure, ma'am.
I made a small PowerPoint, but I'm not able to share it.
Why not? We'll post to you, madam. Just wait, madam. Just 1 second.
1 second. I don't think I require a PowerPoint also, because I can just say, start with some of the researchable areas.
Okay.
See, before we identify a research area, it is the reforms, tax reforms, that we have to focus on. Okay. And since 1990, even earlier to 1990s also, we had many reforms. And since 1990, the focus of Indian government, both at the center and state, has been on various tax reforms. Normally, we try to go by GDP to measure the growth. So economists use GDP as a rough idea of growth. Tax to GDP ratio is taken as an important part of this research. India's tax GDP ratio presently is 9.88%, that is financial year 20. And this is the lowest in all the past, among the past 10 years. If you compare the past 10 years, this is the lowest. It was 10.97% in 2019 and 11.22% in 2018. And presently it is down at 9.88%. And we know the reasons are many. So to begin with, taxes are supposed to give revenue to the government. So whether the taxes are revenue productive or not can be taken up as the research area by all the potential faculty members here who are waiting to enroll into PhD. They can always think of this area from the point of revenue productivity. Because Adam Smith has given us 10 canons of taxation to understand whether taxes are meeting these rules or not. And one of the canons of taxation talks about productivity. Taxes have to give adequate revenue to the government to meet various public expenditure items. So from the point of revenue productivity, one can examine the tax reforms. To what extent tax reforms have contributed to the increased revenue? For example, they say the latest reform, if you start with GST, goods and services tax, whether goods and services tax has resulted in increased revenue or not. This can be one of the areas of research. That is impact studies of GST. In other words, all the tax reforms and the responsiveness of the tax reforms can be taken up for research. Then, the implications of recent tax reforms accompanied by major tax rate reductions can be studied. Tax rates have been reducing, whether it is income tax rates or corporate tax rates. for the past 2 decades, we find we had the highest income tax rate and corporate tax as high as 90% and above once upon a time. From there, we have come down to 30% of income tax. So the present maximum rate is 30%. So whether the tax rates, reduction in the tax rate has yielded, because what we feel is if tax rates are reduced, revenue would increase because tax compliance would also increase. So whether this is happening or not, across countries, this can be studied, not only in India, but we can make a comparison of tax rates and revenue yield across countries. Then government is spending its revenue on various social welfare activities, like, for example, education and health, infrastructure, pensions, and so on. So somebody can analyze all these public expenditure policies and they can examine the hypothesis that public spending in these areas of infrastructure, education, health, and pensions, etc., is positively correlated with economic growth or not, because the expenditure on these various welfare schemes is supposed to increase the welfare of the people as well as contribute to the economic growth. So this hypothesis can be tested whether public spending in these areas of education, health, infrastructure, pensions, etc., is contributing to the growth or not. Nobody has done this research from the point of the economic growth. Then we can study from the point of the public finance policies across countries. Because public finance, one of the important areas of public finance is tax policy. So across countries, what is the tax policy and what are the trends? And in an emerging economy like India, what should be the trend? So we can always test against canons of taxation, taking the public policy reforms. We can also see how public finance policies and trends are affecting economic growth. Most importantly, our taxation system offers many exemptions. Even Government of India appointed several committees to study the impact of these exemptions, whether the exemptions are really benefiting the targeted audience or not, be it small scale industries or even individuals. Tax exemptions are known as tax expenditures, and somebody can take up a few exemptions given to individuals, few exemptions given to companies or corporates, and then they can study whether these exemptions are really benefiting the target group of people or not, or what is the revenue loss because of these exemptions. In fact, Government of India is interested in studying, because UGC wanted somebody to take up a major research project on the impact of tax expenditures on the revenue generation of the country. Similarly, corporate tax reforms are happening, so we can take corporate tax reforms and corporate tax revenue generated. Then we have tax buoyancies and tax elasticity measures, which will help us to understand whether the tax reforms are responsive to the tax changes made in the tax rates, etc. So we have two methodological tools used in the research areas of taxation, and these tools are known as tax buoyancy and tax elasticity. The productivity of the tax system is determined by applying the concepts of tax buoyancy and tax elasticity. And assessing tax productivity is important because it allows us to examine the responsiveness of the tax system, and also its effect on the equity and efficiency of the tax system. There are several models given by economists, and two popular tools are these buoyancy and elasticity measures. Tax buoyancy is an indicator to measure efficiency and responsiveness of revenue mobilization in response to growth, that is, in response to GDP. And a tax is said to be buoyant, that is, tax buoyancy is there, if the tax revenues increase more than proportionately in response to a rise in national income or output. That is, a tax is said to be buoyant when revenues increase by more than 1% for a 1% increase in GDP. Tax elasticity is considered a better indicator to measure tax responsiveness because elasticity measures the automatic response of revenue to changes in income less discretionary changes in tax policy, while buoyancy measures the total response of tax revenue to changes in income and discretionary changes in the tax policies. So therefore, reforms can become the basis for research, and there are hundreds of reforms that have happened since 1980s, and all these reforms can be taken up either as for the research studies, either as minor research project or as major research project or for PhD or other research papers. So the scope in taxation is plenty for research, but normally what I find is very few researchers have selected topics in the areas of taxation, especially in the Department of Commerce, though in the Department of Economics, because public finance is related to economics, there are many research topics in the area of public finance and taxation. But economics and commerce are closely related, and research in commerce cannot be done without using the basics of economics. Therefore, I feel that the youngsters who are participating here can think of selecting some research topics in the areas of taxation. In the introduction, I was surprised that almost all the speakers who spoke have made very apt references to the problems of taxation. Professor Sriram Venkatesh was saying that 2 bananas purchased had a slip attached with the tax mentioned on it. Registrar was talking about the tax and its implications. So almost all the speakers made relevant comments. Professor Prashanta hit on the right note, saying that people treat tax as a burden. We all know that tax is a compulsory payment. I think something is wrong with my net. I'll just get back. We all know that tax is defined as a compulsory payment to the government without expectation of any return of equivalent service from the government. When we pay tax, we do not expect that the government will give us some goods or services in return. So therefore, everybody raises this question: why should we pay taxes? Paying taxes, according to Benjamin Franklin, is taxes are what we pay for a civilized society. Then why is that people hesitate to pay taxes and then treat taxes as a burden or taxes as a liability? Many reasons. One is because the tax rates are very high. Therefore, we like to avoid paying taxes. If possible, we try to evade taxes. So tax avoidance and tax evasion are the two important concepts which all of us should understand. Why reforms are happening? Reforms are happening because we should not encourage tax evasion and also tax avoidance. In fact, reforms can help us in our tax planning. So why everybody treats as a burden is because of high tax rates. Secondly, tax rates are not only high, they were very, very high once upon a time. And now, according to the finance minister, they have been reduced on par with other countries across the world. Therefore, they say we have reached a level playing field as far as tax rates are concerned. That is, our tax rates are almost on par with other countries in the world, whether it is income tax rates or corporate tax rates. Still, we feel tax is a burden. Maybe the revenue that is collected by the government in the form of taxes is not accounted to the citizens in the form of various services. Suppose we pay user tax for roads, using the roads. If the roads are bumpy and they are not amenable for smooth transportation, naturally we feel that what we are paying is a waste and we should not pay taxes to the government. So, high tax rates and unaccountability of the tax revenue to the citizens. This is dissuading the citizens from paying taxes. Second, the procedure all these years was very, very cumbersome. The procedure of paying taxes was very, very cumbersome. Of course, because of various reforms now in the payment of taxes, filing of tax returns, both administrative reforms are brought out with many qualitative measures is making our job easier, but otherwise, the tax payment procedures, tax calculations are very, very cumbersome. Once upon a time, I would like to quote something. James Whistler was asked if he agreed that the stars were especially beautiful during nights. His reply was, well, not bad. The stars are really beautiful, but there are decidedly too many stars in the sky, and they are not very well arranged. I would have done it differently. This is what James Whistler said. That is, he feels that the stars are many and they are not arranged properly. Same thing he would have surely said about taxation, because we had so many taxes. I think nearly 29 taxes are there, were there till recently, which we had to comply with. Then, to say that tax procedures, tax calculations is very complicated, Franklin Roosevelt, who was the President of the United States, sent a letter to the Commissioner of Internal Revenue Service of US, along with a tax return, explaining his problems in determining the amount of tax he owed. He says, as the note says like this, as this is a problem in higher mathematics, may I ask the Bureau to let me know about the amount of the balance due? Because he considers the hardest thing in the world is to understand and calculate income tax. Maybe this was true. Then one lady, Carteret, was the guest of Jonathan Swift in Ireland. Ireland, as you all know, is a beautiful place. It is described as God's own land. Lady Carteret expressed her admiration for the quality of air in Ireland, which is very, very pure. Jonathan Swift, the writer, responded very quickly. He said, "For God's sake, madam, don't say that in England, because if you say that the air is pure, they will surely tax it." All these three people have the same opinion that there are too many taxes, tax calculation is cumbersome, and everything is taxed on this earth. Perhaps the tax scene in India a few decades ago was such that the statements of Einstein, Franklin Roosevelt, and Jonathan Swift could very well apply to our context. The tax policy in India until the early 80s was guided by the twin objectives of equitable distribution of wealth and mobilization of resources. This was in tune with the socialistic pattern of society embraced by us then. Tax rates were progressive, and progressive tax rates means higher the income, higher the tax rates. The maximum marginal rate of personal tax was as high as 95% up to 1974. Can you all believe that the tax rate was as high as 95% up to 1974? Then this was reduced to about 77% later, and now, of course, it is reduced to the maximum of 30%. High rates of tax naturally fostered evasion and avoidance on a large scale. Then there are a plethora of incentives which distorted the tax laws. The tax laws indeed became a veritable jungle, and Nani Palkiwala said, tax evasion has become a national sport. And Justice Ahluwalia said, in India, the problem is we have too many taxes, but too little revenue. So the decade of the 1980s, etc., witnessed high tax rates, and perhaps high tax rates led to tax evasion and tax avoidance. So tax reforms, in fact, aimed at these two weaknesses, that is tax evasion and tax avoidance. What are the defects in the present Indian taxation system? As we all know, India is a federal nation. We have the central government, we have the state government, and we have the local government. Central government has the right to levy certain taxes. The state government has got the right to levy certain taxes, and the local government also has the right to levy certain taxes. Local government, like municipality, levies the municipal house property tax and so on. Central government levies the income tax, the corporate tax. The direct and indirect taxes are levied by the central government. State government levies taxes like on agriculture and so on. Somebody was mentioning about the number of taxpayers in India is very, very less. Yes, compared to the population, compared to the people who are earning income, the number of taxpayers are very, very less in India. Till recently, only 2% of the population was covered by the taxes. Maybe that has increased now to 4% or 5% and not more than that. So there is a need for increasing the number of taxpayers, that is not only the tax base, but also the number of taxpayers. So reforms started way back in 90s. Tax reform started way back in 90s because Government of India, as all of us know, has taken up several reforms in 1991 in the name of LPG, that is liberalization, privatization and globalization. And reforms also happened in the area of taxation since then, because tax revenues are supposed to contribute to the development objectives of the Government of India. So tax reforms started since then, and we started with one reform on the administration side, because the problem was compliance cost was very high, that is collection cost of taxes was very high. Tax revenues, the volume of tax revenues was very less. The cost was more than the volume of tax revenue collected. So in order to adjust this trend, that is increase the revenue and reduce the tax cost, the income tax department started with computerization. Income tax started with allotting PAN numbers, permanent account numbers for SSEs. And since people had a fear to file their returns because of the cumbersome procedures and the complications involved in tax calculation, they introduced a very, very simplified form called Saral. Just one-page form to give the details of the income earned by the individuals. And this form called Saral, in fact, was very, very encouraging for people to file their tax returns. It was really very simple. And Income Tax Department came out with a slogan called File, Smile and Go. That is, they wanted the procedure to be very simple, so they introduced Saral, and they have introduced computerization, and people could file their returns with a smile. So their slogan was File, Smile and Go. And central government wanted to address the problem of tax evasion, and they have introduced one major tax reform in the form of VDIS. VDIS is nothing but Voluntary Disclosure of Income Scheme. So under the VDIS scheme, Voluntary Disclosure of Income Scheme, which was open for a few months, and it is a one-time amnesty scheme, tax amnesty scheme, all those people who did not disclose their income and file their returns earlier and pay their tax were given one-time opportunity to voluntarily disclose their undisclosed incomes. So accordingly, it was a very, very successful reform, and this scheme yielded 10,000 crores of rupees of income tax in form of one-time payment by the assessees who did not pay their tax earlier. That is, all the tax evaders were given one-time opportunity to pay tax through this scheme of VDIS, Voluntary Disclosure of Income Scheme. Then our taxation system also resulted in lot of disputes. Lakhs of disputes are pending settlement, and the dispute settlement procedure is very, very complex, time consuming, and very expensive, not within the reach of the common man. And there were a number of disputes because of human intervention. The income tax officers who had some other objective in mind, they did not settle the disputes, and therefore we had lakhs of pending disputes. So in order to address these pending disputes, again, Government of India has brought in a major reform and a one-time measure, which is called as KVSS scheme. Just as VDIS scheme, they introduced one scheme called KVSS, which is known as Kar Vivad Samadhan scheme. Kar is tax, Vivad is dispute, Samadhan is settlement. So this is also introduced only to settle the disputes, and KVSS scheme, that is Kar Vivad Samadhan scheme, was very, very efficiently handled, and many disputes worth hundreds of crores of rupees were settled, and government could successfully close the scheme, which is called as Kar Vivad Samadhan scheme. Then in order to motivate people to pay taxes, because people were always hesitant to pay taxes, as they treated it as a burden and so on, government has introduced one more incentive for the taxpayers, and this came in the form of a scheme called Samman, SAMMAN, Samman. Samman is respect. That is, respect the taxpayer and cooperate with him and recognize all the taxpayers who sincerely pay tax. So under the scheme in the name of Samman, government has given several incentives. That is, a person who is continuously paying taxes for 5 years, and whoever has paid the highest taxes during the last 5 years would be recognized and given a certificate of appreciation by the central government. And this appreciation in the form of Samman has given him some SOPs, some incentives. And the commissioner of income tax in Mumbai region has gone to further extent, saying that all those people who have paid taxes for several years, and if for any reason the taxpayers are in trouble, financial troubles, then a part of the tax paid by them would be advanced as financial assistance to those people. This is really a true innovative measure in order to motivate people to pay taxes. So in this way, Government of India has come out with several schemes in order to encourage people to pay taxes and not to evade taxes. Still, people say that some taxpayers close their eyes, some close their ears, some shut their mouths, but all pay through the nose. That is, Government of India is now, because of computerization, able to identify people who are evading tax or who are paying less tax, who are not accounting for their revenue or incomes, and it is making them pay tax through their noses. And I heard a person saying, "Dear taxman, I still don't understand why I can't claim dog as a dependent." You know why he says this? Because the definition of dependent in the Income Tax Act is so complicated that for dependents, certain incentives are given, certain exemptions are given, say in the form of medical expenditure and so on. So this person very sarcastically says, "Dear taxman, I still don't understand why I can't claim dog as a dependent." This shows that our tax laws are still complex and they are not straightly put to the persons. Even today, it is said that 60% of the taxpayers are hiring a professional to file their tax returns. Why should this happen? When the tax procedures are simple, tax rates are simple, and tax filing of returns is made simple, why should we still hire tax professionals to file our returns or calculate our tax? So this again should be addressed. So India has vigorously pursued various reforms across in the country from 1991 in the name of economic policy reforms, in the name of industrial policy reforms, in the name of monetary policy reforms, in the name of fiscal policy reforms. And all these reforms go hand in hand. You cannot look at tax reforms without understanding the other reforms, the economic policy, industrial policy, monetary policy, and fiscal policy, because tax reforms have a connection with all these other reforms. So in a way, research in taxation is a multidisciplinary subject. You have to understand economics, you have to understand the export-import policies, etc., in order to avail the incentives given for exporters. You have to understand the industrial policy in order to avail various tax concessions given by the industry under the corporate tax structure. And we all should understand that tax reforms is not a one-time affair. Reforms should happen continuously, and there is no rest point for the reforms. From time to time, as and when the government objectives, developmental objectives change, taxes also need to suit the development objectives, and hence tax reforms and economic reforms go hand in hand. And a simpler, transparent tax regime will contribute to the business and investment climate. Because if tax rates are very high, then we know that capital of our nation will automatically go to those nations where tax rates are less. For example, when our tax rates were as high as 47, corporate tax rates were as high as nearly 50%, Singapore had only 16% corporate tax rates, and Indian businessmen prefer to establish their businesses in Singapore rather than in India because of the high tax rates. So high tax rates will dissuade investment climate also. Therefore, we have to check that point from the angle of investment and flight of capital. Then transparency, fiscal transparency. We all know that government is spending tax revenue on various aspects. Like one example is public goods. Government spends on public roads, government spends on defense, government spends on construction of dams, and so on and so forth. Now, unless the citizen is clear and aware that the taxes he pays are spent on public goods for the welfare of the common man, where everybody will have a right over the public good. Public goods are meant for everybody. Nobody can claim that they are their private goods. If you have a road in front of your house, it is a public good. If you have a road in your farmland, it is a private good. So government spends on various public goods, but there should be transparency on the various spending activities. Then taxpayer services. If these services are not improved, then again, the taxpayer is not happy. What is that he expects from the government as a taxpayer or as an SSE is a simplified tax structure, reduction in the number of rates, flattening of tax brackets. Now, for example, this year, Nirmala Sitharaman has given option on 5 brackets. Why do we require 5 brackets? 10%, 20%, 30% were the earlier brackets. Now she has added 2 more brackets, and the number of tax brackets are more, and therefore maybe she wants to benefit the maximum. Then we also wanted to increase the tax base, widening of the tax base. So in order to widen the tax base, in other words, in order to bring more number of persons into the taxable limits, Government of India again, they have introduced 1/4 economic criteria. Later, they have changed this criteria as 1/6 economic criteria. That is, if a person is owning a house, if a person is visiting a foreign country, if a person is having a car, if a person has a credit card, if he has a club membership, if he is paying more than a certain amount to a hotel as a bill, and so on, these are the economic criteria. In other words, government is trying to add more number of SSEs, bring more number of SSEs into the taxable limit by taking the base of economic criteria. But owning a car, owning a telephone, owning a house, etc. is so common that this reform introduced once upon a time doesn't hold good now. So in the recent period, again, several other criteria have been added in order to increase the tax base. Taxpayers' education is very, very important. Simplification of tax laws and procedures, making them more user-friendly is very important. Speedy disposal of disputes is very, very important. And reducing the distortions in the tax system is very, very important. So these are the areas where tax reforms have to concentrate. Simplification of the existing systems, because complicated tax systems, they bring about high compliance cost and result in tax evasion. What is the point in introducing a complicated tax system where the cost of collection is very, very high? Cost of collection is very cumbersome. So we have to see that this tax payment system mechanism is also simplified. Then we have Indian tax system has undergone many, many reforms in order to ensure better compliance, in order to make tax payment easy, and in order to enforce the tax laws in a simple manner. So rationalization of tax administration is the need of the hour, which is still going on in India. How do we rationalize the tax administration? As Ravi was saying, GST is one of the biggest indirect tax reforms in the country, which was implemented from July 1st, 2017. India has adopted the dual GST model where both central and state levy taxes. Of course, GST has been a game changer for the Indian economy because it has integrated India into a single common market. And by eliminating cascading of taxes and reducing transaction costs, it has enhanced ease of doing business and has provided an impetus to Make in India campaign. And because of this GST, India's rank in ease of doing business has jumped by several numbers, and we are in the top 10 nations as far as ease of doing business is concerned, and this is attributed to the GST because this has brought out unified tax regime for both goods and services. Compliance cost has reduced and minimum physical interface is there. So the World Bank's ease of doing business shows that India jumped 79 positions from 142 to 163rd in 2019. And GST is one such reform to ease the complex multiple indirect tax regime in India. Then there are several challenges in designing a tax system. As we know, we have direct taxes and indirect taxes. And equity and efficiency are the two important guiding factors in designing a tax system. We have the main challenge in designing the tax system is to find a way of raising resources which is administratively and politically feasible and which promotes equity and efficiency as far as possible. Another challenge is to have a trade-off between revenue, administration, political acceptability, equity, and efficiency, because each one contradicts with the other. But by and large, we should know that equity and efficiency are the two important goals. Tax reforms, we should understand, are a part of fiscal reforms. And fiscal policy deals with revenue and expenditure of the government. In 2019, central government has brought out another scheme, that is Income Tax Department has brought out another scheme in the name of Sabka Vishwas. It is Legacy Disputement Settlement Scheme of 2019. This scheme is a one-time measure for liquidation of past disputes of central excise, the service tax, and other indirect tax enactments. A few minutes back, I was talking about KVSS, Kar Vivad Samadhan scheme, which was meant for settlement of disputes for income tax and corporate tax, direct taxes, whereas Sabka Vishwas scheme is meant for settlement of disputes in central excise, service tax, and other indirect tax enactments. This scheme was introduced in 2019. This scheme provides all the eligible persons shall declare the unpaid tax dues and pay the same in accordance with the provisions of the scheme. This scheme provides certain immunities, including immunity from penalty, immunity from interest, or any other proceedings, including prosecution to those persons who pay the declared tax dues. So, Sabka Vishwas Legacy Disputement Settle Scheme of 2019 is aimed at settling disputes of central excise, service tax, and other indirect tax enactments with many immunities promised, and immunity from penalty, interest, and other proceedings is one of the important. Then the scheme Similar to this Sabka Vishwas scheme, we have a scheme called Vivad Se Vishwas. Vivad Se Vishwas scheme, the objective of this is to reduce litigations related to direct taxes. This scheme says a taxpayer would be required to pay only the amount of the disputed taxes and get complete waiver of interest and penalty, provided they pay the tax by 31st March 2020. And because of Corona, they have been extending this time period. The scheme was opened a few days back until 30th June. Maybe it is now extended. I don't know the latest position. So Vivad Se Vishwas scheme was supposed to be closed by 31st March. They extended to 30th June 2020. And all those appeals and cases which are pending at any level, they can benefit, especially relating to this tax payments, direct tax payments. Then government has come out with a single source, fully automated new return system, rationalization of cash ledger system, a single refund disbursing mechanism, and generation and quoting of document identification number. All these reforms are brought out only from 2019 to 20. And electronic invoicing. One more recent reform government has brought in is it has proposed to introduce electronic invoicing system, which is called as e-invoice, for all business to business invoices in a phased manner. E-invoicing is for business to business transactions. Then government is also bringing in something called QR code, that is quick response code, QR code. This system of invoice with dynamic QR code is meant for all business to consumer invoices for the taxpayers having annual aggregate turnover of more than 500 crores, which came into implementation from 1st April 2020. Now this DIN, that is document identification number, is used for all communications sent by its offices to taxpayers and other concerned persons. This is used for search authorization. DIN is used for summons. It is used for arrest memos. It is used for inspection notices and letters issued for any inquiry. Document identification number is like our PAN number. With one number, they try to identify all these cases of summons, arrest memos, inspection notices, and inquiry notices. Then small taxpayers need not file their annual returns. That is, who are the small taxpayers? They having an annual aggregate turnover of 2 crores and less. They are exempted from filing tax under the GSTR. Then e-assessment scheme has been introduced in 2019. In order to provide greater accountability and transparency in tax administration, the CBDT, that is Central Board of Direct Taxes, launched a scheme of e-assessment of income tax in electronic mode with no human interface. Greater efficiency, transparency, and accountability in the assessment process is assured because of this e-assessment. That is, there is no physical interface between the taxpayers and the tax officers. Perhaps this is the most welcome change for the individual taxpayers. Government has also introduced e-appeals. Electronic media is being used and for various purposes, and e-appeals is meant for making any appeal online, eliminating interface and to the extent possible, to utilize the resources optimally and judicially, e-appeals are encouraged. Then pre-filling of returns. This is again recently introduced reform. In order to ease the compliance cost for individuals, pre-filled income tax returns have been provided to more than 2 crore salaried taxpayers. Then integration of our database with Aadhaar and PAN. It prevents any of the duplicate PAN from being issued to any applicant, as well as to identify the applicant having already got a PAN. The permanent account number issued by the Income Tax Department has now taken the role of identifier beyond the department, as it is now required for various activities like opening of bank account, you require a PAN, opening of a demat account, you require PAN. For other financial transactions, you require PAN. For registration under GST, you require PAN. So PAN is being leveraged to become Common Business Identification Number, CBIN. Or simply it is called as Business Identification Number, BIN. This is BIN is meant for providing registration to a number of government departments for various services they are rendering. Now ePAN is being allotted to individuals applying through Aadhaar based eKYC, that is electronically know your customer route of application, and within 2 hours turnaround time, ePAN is being given. Electronically generated permanent account number. We can download ePAN through PAN website after OTP authentication, and ePAN can be printed. ePAN is also embedded with an enhanced QR code which captures demographic data as well as photograph and signature of applicant. This is the latest addition. That is, ePAN is having a code which is called QR code, which will capture the demographic data as well as photograph and signature of the applicant. Then we have integrated e-filing and centralized processing center. The Union Cabinet has given approval for this centralized processing center project of the Income Tax Department. The objective of this CPC, Centralized Processing Center, is to improve the income tax administration by introducing measures such as pre-filling of income tax returns, acceptance by taxpayer as a means to improve accuracy and reduce refund processing turnaround time, facilitate taxpayer in resolving outstanding tax demands, integrate contact centers for taxpayer assistance and taxpayer outreach program through digital media, and bring significant enhancement in services to taxpayers. I was mentioning about enhancement of taxpayer services, and this is being done through CPC, that is Centralized Processing Center. Then CPC is also ensuring horizontal equity by processing returns filled by all categories of taxpayers across the country in a consistent, uniform, rule-driven, identity-blind manner. That is, our identity is not revealed. It is based on rules and regulations only, so that fairness in tax treatment for every taxpayer is assured because of this hiding of identity of the taxpayer. So, now we have centralized processing cell with tax deduction at source certificates. CPC generates tax deduction at source certificates from the data reported, and these certificates have a reference number. They are verifiable online, and they have a unique combination of whoever is deducting and whoever income is being deducted from. So deductee combination information is given through this CPC, centralized processing cell. Now, during this calendar year 2019-20, several other initiatives were taken by CPC to capture the data of salaried persons for the purpose of pre-filling of ITRs, so that the ease of compliance for the taxpayers is ensured. So we can easily file because of this pre-filled of income tax returns. That is, documentation verification is done through DIN number, and this will trace the taxpayer, and they'll verify the communication received from the income tax office. Then, in order to promote digital payments of tax, online payment of direct taxes by taxpayers. This is the reform. Online payment of direct taxes by taxpayers is facilitated through banks. Presently, 6 banks, SBI, State Bank of India, Punjab National Bank, Indian Bank, HDFC Bank, Canara Bank, and ICICI Bank, they have started this e-payment facility online through debit cards as well. Whoever is paying online should only select the bank and proceed for payment. Then most of the ATMs of Corporation Bank, Bank of Maharashtra, Axis Bank, Central Bank of India, and other banks, they are also allowing ATMs for payment of online taxes. What we have to do as taxpayers is, the taxpayer has to just click on the tax payment link on online ITR preparation facility, which will display filled self-assessment tax challan from the tax payment portal with all the fields which are already filled. So what we have to do is just to click on the tax payment link, and we get our pre-filled tax challan, and we have to just make the payment online through any of these banks. And now they have even using mobile app for tax payment and tracking of refund status. So not only banks and ATMs, but we can also use our mobile phones with proper apps downloaded for making our tax payments online. And there is a provision called status inquiry. We can always know our status through online. Now, the Central Processing Cell and Income Tax Returns, ITR, CPC ITR, this is the processing unit of the Income Tax Department for processing and accounting all income tax returns filed electronically. CPC, that is Central Processing Cell, has implemented electronic verification code through e-filling, and this has been successfully used, and this is a part of the green initiative taken by the Income Tax Department. Then average processing time has been reduced to 50 days for the assessment year 2019-20, which is less than the period specified in Citizens Charter, which says 6 months. And this is much less than performance in manual processing. Manual processing took more time, and the Citizens Charter mentioned it as 6 months, whereas now the processing time has been reduced to 50 days. that is less than 2 months. Then Central Processing Cell has also now enabled the web-based taxpayer grievance mechanism. Taxpayer grievance mechanism online. Under this system, the taxpayers can log in to the e-filing web portal of the department and submit their grievance online. Grievances also online. The resolution of the grievances and other assistance is provided through registered emails of the taxpayers. Then status of redressal of the grievance is also updated on the e-filing web portal. So grievances, not only payment of taxes, but also settlement of grievances can happen online. Then we have e-Nivaran, another important component of the recent measures of tax reforms, e-Nivaran. E-Nivaran is the online grievance redressal system of the Income Tax Department. All types of grievances such as PAN application, processing, assessment, appeals, tax deductible at source, TDS can be filed by taxpayers through this e-Nivaran scheme. It is a 100% paperless system where communication is enabled through emails and SMS. Apart from Income Tax Department, other related agencies such as the NSDL, SBI, Refund Banker, etc. are also roped into the scheme. So we have CPC ITR, CPC TDS and e-filing portals now, and these are addressing the grievances filed by the taxpayers. Payment of refund to taxpayers has been made easy. I think most of us also experienced. The other day, somebody was saying that they had a refund of 18 rupees by the Income Tax Department very promptly, and they did not know whether 18 rupees check can be taken to the bank for deposit. Is it worth taking a refund check of 18 rupees? If it is directly transferred to the bank account, it is fine, but they received a check for 18 rupees. Now, payment of refunds to taxpayers. The Refund Banker project has been enabled, and for processing, determination, generation, issue, dispatch, and credit of refunds. This project has made the process of delivery of refund completely automated, speedy, and transparent. Under the Refund Banker scheme, refunds determined by the income tax assessing officers and CPCs, that is Central Processing Cells, are sent directly as direct credits to the bank accounts through the State Bank of India, which has been designated as the Refund Banker agent of the department. And a web-based status tracking facility in collaboration with Indian Post and National Security Depository Limited, Indian Post Offices, etc. is available under the refund schemes. Call center facility with toll-free number is also available for tracking the status of refunds issued through the scheme. And from 13th August 2020 onwards, faceless assessments have come into effect. Faceless appeals are also effective from 25th September onwards. And faceless assessments and faceless appeals are, I think, a boon for the taxpayer, because the taxpayer's identity is not revealed through these faceless assessments. So these are some of the important initiatives taken by the direct taxes as well as indirect taxes in the area of direct and indirect taxes by the government in order to ensure that tax payment is more assessee friendly, and technology is being leveraged in order to make the tax system more assessee friendly, whether in terms of filing of our returns, in terms of settlement of disputes, in terms of refunds, in terms of payment. In all these aspects, technology has become the main tool and they are enabling the technology to make the tax system more and more user friendly. Perhaps the need of the hour is the use of technology, and in this sense we should appreciate the government of India for taking various reforms using technology as a major tool. Ravi, can we give a can we stop here for some time, because I think audience will be are really taxed because of the seriousness of the topic.
Yeah.
Sure, ma'am. Sure, ma'am. We can take a break for 10 minutes.
Yeah. Then shall we continue for 1 more hour with fiscal policy, etc.?
Yes, madam.
Yeah, okay. But all the what I wanted to emphasize in this session was so many reforms are happening from 1980s to 2020, and all these reforms become the researchable areas for researchers, either to write a research paper or to take up minor major research projects or even for their PhD. So the scope of research in taxation is really there is a wide scope for research in taxation areas, provided we understand the implications of various taxes on the growth of the economy of the country, or on the development, or on the welfare measures that the government of India is taking up. Somewhat like these are evaluation studies. Suppose these reforms are in the area of public expenditure. To what extent revenue is contributing to the exchequer of the government of India? Such studies have not been done. Okay, very few, rarely, I think very few centers in centers of excellence in foreign universities are doing this research in public finance area, or in the taxation area. But in India, the research is not very, very encouraging. So youngsters can take up many areas, and they have plenty of literature available in foreign countries in the area of public finance. So whether to write research papers or research projects or PhDs also, one can approach various universities where research is happening in the area of public finance, because the broad area is public finance, not taxation. So in the area of public finance, one can find plenty of review of literature is there available. And there are studies. We have NIPFP, that is National Institute of Public Finance and Policy in New Delhi, which is a specialized institute. NIPFP, National Institute of Public Finance and Policy, is a special institute which does research only in the area of taxation and public finance. It's a very beautiful campus with a very good library. So there you have many research projects taking place, and continuous research is happening in the area of public finance in New Delhi in NIPFP, as far as India is concerned. And as far as other countries are concerned, you have several universities in the US and England, and as well as America, in Australia, where you have research, very serious research taking place in the area of public finance. So thank you very much for the patient listening. I don't know whether I was really useful, but I just gave my ideas. So somebody who is interested can take up research in these various areas.
I was always confused as to what could be the areas of research in the field of tax. But today you have thrown light on various researchable aspects in tax which needs to be probed into. So thank you so much, ma'am, for sharing your ideas, and also your explanation on like how the tax reforms were brought about as a process of tax simplification to bring more and more people to pay the tax. The explanation was very interesting, and it was in a very simple, easy way you have made us to understand. And I could see there are many accolades from the participants in the chat box. Yes, ma'am, we'll take a break for 10 minutes, and then again very quickly we'll come back for the next session. Dear participants, now the time is 5:07. I request you all to join back by 5:20. We all will join back by 5:20. This will remain as it is. Ma'am, we'll join back by 5:20.
Ravi sir.
5 minutes.
Ravi sir.
చెప్పండి.
Can I post attendance, sir? Venkatesh.
No. After that. After coming back,
Okay, sir.
Sandhya madam, you only give 5 minutes. Don't give 5:20. 10 minutes are not required.
Acha, okay, sir. So we will quickly join back by 5:15. Now the time is 5:08, right? Sir, 5:15 is okay?
Yeah, okay.
Yeah. So I request the audience participants to join back by 5:15.
After coming back, you can check the attendance for the first session.
Yeah. Yeah.
And,
Once you join back, the attendance for the first session will be shared in the chat box. Yeah, attendance will be shared once we come back at 5:15. A link will be shared. You'll have to fill up that link, the information in the link. That is how we would take the attendance. You all can just get up and then move around and then come back quickly. Usha ma'am?
Hello.
Yeah, ma'am, can we? Yeah, so welcome back to all the participants. So
Thank
we
you.
shall continue with the second session.
Second
On,
session will be on fiscal policy, Sandhya.
yes, ma'am. The second session will be on the physical policy, which will be continued by Usha ma'am. Ma'am, please take over.
Yeah. Good evening, participants, once again. I hope I'm not very serious in my presentation because the topic itself is very serious. So, in this session, I would like to cover the importance of fiscal policy and how taxation as an important tool of fiscal policy can be used to adjust the ups and downs in an economy. Okay. As we already said, India is a federal government. Taxing powers are there with center as well as the states and also the local level. And fiscal policy is the means by which government adjusts its spending levels and tax rates to monitor and influence a nation's economy. So deals with revenue as well as expenditure. Fiscal policy refers to the receipts and expenditures and of the government. So it is defined as a policy under which the government uses its expenditure and revenue programs to bring out the desirable effects on national income, production, and employment. So normally, what are the objectives that fiscal policy would like to achieve? Because we are saying government will use its expenditure revenue programs to bring out the desirable effects. In the short run, we have both points of view. That is, objectives of fiscal policy will vary from country to country and from time to time also. So from the short run point of view, government will focus on stabilization, that is economic stabilization, and combating the inflation, rising inflation. Inflation we know is increase in prices, and reducing external vulnerabilities like our payments, imports, exports, etc. So government in the short run will focus on macroeconomic stabilization, whereas in the long run, the government will focus on fostering sustainable growth. That is, growth cannot be seen in some years and then we cannot have stunted growth in other years. So growth has to be continuous. So growth has to be sustainable. We should be able to sustain the growth. So the fiscal policies, long run, they aim at fostering sustainable growth, reducing poverty, and so on. So both short run and long run objectives of fiscal policy are meant for macroeconomic stabilization as well as for ensuring sustainable growth. Then we need to have full employment. A country has to aim at full employment because we all know that India suffers from partial unemployment, and so on. So we need to achieve, our target is to have full employment. Our target is to stabilize the price levels so that inflation doesn't affect our income and expenditure consumptions patterns. Then stabilize the growth rate of the economy. Then maintain equilibrium in the balance of payments. That is, for exports and imports, we have to export more than importing so that we will have enough foreign exchange reserves. So equilibrium should be there in the balance of payments and economic development. So the broader objectives of fiscal policy is to achieve economic development, full employment, stabilize the growth rate of the economy, stabilize the price level, and maintain equilibrium in the balance of payments. Then, how does fiscal policy come into effect? Okay. Now, government can increase or decrease its expenditure based on the revenue it has. Suppose the tax revenues are more, public expenditure will be more. If the tax revenues are less, public expenditure will be less. Because government has various sources of revenue, but tax revenue is the most important source of revenue for the government. So major source of revenue for the government comes from taxes, direct as well as indirect taxes. So using this revenue, government will plan expenditure. So whenever we have deflation and inflation pressures, then combination of expenditure and taxation programs are used. That is the purpose of fiscal policy. So whenever we have inflation, prices keep rising. Whenever we have deflation, prices keep falling down. And the consumption and development of the economy is affected because of this inflation and deflation. Because people will not have enough power, purchasing power. Whenever there is inflation, we will be able to buy less for more. That is, we pay more but buy less. So here, government always tries to have a compensatory fiscal policy. That is, whenever there is depression, public expenditure has to be increased. Depression means less demand for goods and services. So now the job of the government is to increase the demand for goods and services. So whenever the economy is facing depression, we need to spend more, and this is increase in the public expenditure should take place. Okay. So an increase in the public expenditure should happen whenever there is depression, so that aggregate demand for goods and services is there, and this will result in consumption, increased consumption. When aggregate demand for goods and services increases, okay, with our consumption, then you must have noticed US was in depression since 2008 for a long period of time, and Obama has he used fiscal policy by introducing a reduction in taxes. Why did he reduce taxes during depression? Is by reducing taxes, people will have more money in their hands. Suppose from 30%, the tax is brought to 10%. Okay. If the rate of tax is reduced to 10% from 30%, people will have 20% additional income in their hands. So what will they do with the additional income? Whenever we have more income in hand, we will spend more on goods and services. We travel more, we eat more, we dine out, and we buy more goods and services. So why Obama has reduced the tax rates during depression? Now you can understand. People should have more income in their hands. That is, disposable income in the hands of the people should be more during depression times, so that disposable income can be spent on goods and services. And when we are spending more and more on goods and services, the demand for goods and services will increase, and investment in goods and services will happen, and the economy can be brought back to the track. So whenever we are going out of the track because of depression, there is always fiscal policy which comes to save us. Fiscal policy will depend on the tax policy, and tax rates are reduced so that people will have more disposable income in their hands. Suppose there is inflation, that is, prices are increasing, then public expenditure should be reduced so that aggregate demand for goods and services will come down. And when aggregate demand for goods and services will come down, prices will automatically come down. So during inflation, public expenditure is reduced, and during depression and deflation, public expenditure is increased. So reducing public expenditure, increasing public expenditure is a part of our fiscal policy decisions. Hope I am clear in this. Now, why do we follow this compensatory fiscal policy? Because economies are subject to chronic changes, continuous changes because of inflation and deflation. So we have to manipulate public expenditure and taxes. So wherever we are using public expenditure and taxes in order to manipulate and bring back the economy into normal track, we call it as a compensatory fiscal policy. Now we have two approaches in compensatory fiscal policy. One is to bring about discretionary fiscal policy. We call it as discretionary fiscal policy because we try to use discretion as far as expenditure and income is concerned. And the second tool is built-in stabilizers. We already have certain policies which act as built-in stabilizers. Because of built-in stabilizers, automatic adjustment of expenditure and taxes will happen whenever there is upswing and downswing. Okay. But whenever we are using discretion, we have to take into account the corporate tax, income tax, and various duties and cesses in order to manipulate them, that is, reduce or increase in order to set right the economy. So automatic stabilization can happen because of built-in stabilizer. Stabilization can be brought about because of discretionary policies like changing the tax rates, reducing them or increasing them, and so on. Whenever we talk about fiscal policy, we have to mention even about monetary policy because fiscal policy deals with expenditure revenue, monetary policy deals with money circulation and interest rates. Both go hand in hand. We have four components of fiscal policy. One is in the form of expenditure, as I told you. The other is in the form of revenue. Here we talk about tax revenue mobilization. Third, we talk about deficit financing. That is, whenever we have shortage of tax revenues, we borrow more, okay, in the form of loans, etc., and that will become deficit financing. And we follow something called fiscal transfers. Normally, we have a finance commission which will decide the share of tax revenue that central government should share with various state governments. So every 5 years, the finance commission will bring out a policy for sharing of tax revenues between center and various states. So this finance commission will use various bases for transferring of revenue collected by the center in the form of tax revenues and then share them with the various state governments based on certain criteria. So how do we make these fiscal transfers? That is, transfer of tax revenue from center to states, from a higher level to lower levels of governments. All these four are important components of fiscal policy. One is expenditure, one is revenue, one is deficits, and other is fiscal transfers. Whenever we talk about government's income and receipts, we talk about two components. One is revenue receipts and other is non-tax revenues. Revenue receipts of the government, we have corporation tax that is paid by companies. We have income tax paid by individuals. We have customs duties. And we have union excise duties. Now we have GST and taxes of union territories. Because GST is collected by the center, which includes CGST, Central Goods and Service Tax. We have IGST, Integrated Goods and Service Tax, and compensation cess from the states. So we have 5 revenue items for the government. One is corporation tax, one is income tax, customs duties, union excise duties, and GST. These are the revenue receipts of the government. Then we also have, other than tax revenues, tax revenues are the above ones. Other than tax revenues, we have non-tax revenues, which are in the form of dividends and profits, external grants, then interest receipts, receipts from union territories, and other non-tax revenues. So among the non-tax revenues, interest, dividends, external grants form the most important component. Then coming to the expenditure side, coming to the income side, we have tax revenues and non-tax revenues. Coming to the expenditure side, we have capital expenditure, revenue expenditure, interest payments, and grants in aid for creation of capital assets. So again, these are the four important ones: revenue expenditure, capital expenditure, interest payments, and grants in aid. Then we say India is suffering from fiscal deficit. Not only India, every country has got this problem of fiscal deficit. We use the word fiscal deficit very commonly, and we have brought in the FRBM Act, that is Financial Regulation and Management Act, in order to curtail this, reduce the fiscal deficit of the government. So what is fiscal deficit? Whenever we talk about fiscal policy, we talk about income and expenditure. Whenever expenditure is more than income, we say there is a deficit. So fiscal deficit is the difference between total income of the government, which consists of total taxes and non-debt capital receipts, and total expenditure. So the difference between total income and total expenditure for the government is positive, then there is no deficit, but it is never positive, it is always negative, so we have fiscal deficit. And this occurs, fiscal deficit situation occurs whenever the government expenditure exceeds its income. Okay, very simple. Expenditure is more than the income. Fiscal deficit is calculated both in absolute terms as a percentage of GDP of the country. In absolute terms, we have figures, and also we calculate fiscal deficit as a percentage of GDP of the country. A recurring high fiscal deficit, that means continuously if we have high fiscal deficit, it means that the government has been spending beyond its means, that more than what the government can collect as income, if it is spending more, then we say it is recurring high fiscal deficit. It is not a good indication, because total borrowings of the government are reflected in high fiscal deficit. So government is describing fiscal deficit as the excess of total disbursements from the consolidated fund of India, excluding repayment of the debt over total receipts. This is a complicated definition. Don't forget about this definition. Just remember that if government expenditure is more than government income, it amounts to fiscal deficit. Then fiscal deficit, we have a formula for calculation of fiscal deficit. It is normally mentioned as a percentage of GDP. For example, if the gap between government's expenditure and total income is 5 lakh crores, expenditure and income gap is 5 lakh crores, and if the country's GDP is 200 lakh crores, then we say fiscal deficit is 2.5% of the GDP. So I'll just reel out the fiscal deficit statistics that I have. In 2019-20, our fiscal deficit was 3.8. 2021, it is 3.5. Projected for 21-22, it is 3.3. 22-23, we are projecting it as 3.1. So government aims to reduce the fiscal deficit from 3.8 in 1920 to 3.1 in 22-23. So what should we do to reduce the fiscal deficit is, we have to increase, obviously, the income, because expenditure cannot be reduced. Government expenditure, in fact, is increasing day by day. But when government expenditure is increasing day by day, and it is not able to generate adequate revenue to meet the government expenditure, naturally the recurring high fiscal deficit will happen. But now the projection says fiscal deficit has to be brought down from 3.8 to 3.1. So what should we do? We should be able to generate more revenue, both tax revenue as well as non-tax revenue, in order to meet the target of 3.1 fiscal deficit by 22-23. But many a time, this is also a researchable topic. Many a time people feel that high fiscal deficit does not always mean that the government is inefficient. High fiscal deficit does not mean that the government is spending unnecessarily more than what it earns. High fiscal deficit can also be a good indicator for the economy, provided the money is spent on productive assets like highways, roads, ports, and airports. Because this infrastructure, like building good highways, good roads, good ports, and airports, it boosts the economic growth and it will also generate more employment. So this is a very good point for research. We can observe over a period of time what is the fiscal deficit. Even if it is high, we can observe the nature of expenditure. Where is this public expenditure going? Is it going into economic infrastructure, social infrastructure like education, health, hospitals, and so on? Is it going into economic infrastructure like building of roads, highways, bridges, etc.? And what type of employment is being generated and how much employment is being generated? Because when expenditure results in employment generation, it is a very, very good sign for the economy. Because what we want is, we want more and more people to come into the employment portals. More and more people should be able to earn their salary, earn their income, and more people will spend on the goods and services. So the economy will automatically pick up the demand for goods and services. So more investments will flow in, more foreign capital investments will come into the country, and so on. So a high fiscal deficit, is it good or bad? Depends on the expenditure. If fiscal deficit is happening because of investment in infrastructure assets, productive assets, whether it is economic infrastructure or social infrastructure. Social infrastructure, for example, education and health. If government is spending more on education and health, the results are not seen immediately, but there is always a long run impact. So if government expenditure is rooted to productive investments like economic or social infrastructure, then even if there is a high fiscal deficit, it is a good indication, because in the long run, it results in the growth of the nation. So this can be studied as a researchable area. Now, whenever there is fiscal deficit, what will the government do? That means expenditure is more than the income. Now, if the government cannot generate income in the form of taxes, tax revenues and non-tax revenues, what is the third alternative? If the government is not able to generate tax revenues and non-tax revenues, the third alternative is to borrow. So government simply borrows money, and while borrowing money, we should see what is the interest that the government is paying, whether the government is capable of earning enough income to make interest payments. Because in 1991, this was the sad situation when we brought into our economic reforms. In 1991, government was not in a position to pay interest. It was almost, in a very, very bad position where we could not pay even our interest. So therefore, the IMF, International Monetary Fund, it requested the government of India, or rather it directed the government of India, saying that if you undertake certain structural reforms in your country, we are ready to bail you out of this financial crisis. When government did not have foreign exchange reserves, government did not have adequate money to make interest payments, and it was in a very, very bad financial position. All our reserves were exhausted. So then IMF promised to bail out the Indian economy provided we undertake certain structural reforms. So because we wanted to come out of that situation, P.V. Narasimha Rao government in 1991 took up the structural reforms as directed by the IMF in the form of our LPG, and then the country could come out successfully out of that trouble. So whenever the government is not able to earn more income in order to meet the increasing public expenditure in the form of tax revenues and non-tax revenues, the only alternative left for the government is to borrow. But who will give the government? Who will lend the government? We have many financial institutions. We have international financial institutions which will lend. The World Bank is there. The Asian Bank is there. Asian Development Bank is there. Crores of rupees are taken as loan for construction of highways and so on. So we have bodies which will lend us money. But what we have to look into whenever we are borrowing is our capacity to pay interest and the principal amount. So now let us come to how is this fiscal deficit met? Through tax revenues, non-tax revenues, as well as borrowings by the government. Then we have revenue deficit. Apart from fiscal deficit, we also talk about revenue deficit. Revenue deficit is related only to revenue expenditure and revenue receipts of the government. The difference between total revenue expenditure and total revenue receipts is called as revenue deficits. Whenever government's revenue expenditure exceeds revenue receipts, we will have revenue deficit as a problem. Now, what is the difference between fiscal deficit and revenue deficit? Fiscal deficit is the excess of budgeted expenditure over budgeted receipts other than borrowings, whereas revenue deficit is the surplus of revenue expenditure over revenue receipts. Whenever deficit happens, okay, either due to revenue deficit or any other reason, then capital expenditure will be more. The deficit is usually financed through borrowing, either from the central bank of the country or raising money from capital markets or by issuing different instruments like treasury bills and bonds and so on. Now, government has got various types of revenues and expenditures, and revenue receipts, capital receipts, revenue expenditure and capital expenditure. These are the headings which everybody should know the meaning and the scope of revenue expenditure, revenue receipts, and so on. Okay. So government revenues in general, they refer to all the receipts that the government has in the form of taxes, customs duties, revenue from state-owned enterprises, capital revenues, foreign aid, and everything. And tax revenue consists of few but bulk direct and indirect taxes, and non-tax revenues are very large with wide variance in collections. So we have large number of non-tax collections. As on today, government revenues, GST is yielding 28.5%, corporate tax is yielding 28.1%, less than GST, slightly less than GST, 28.5 is GST, 28.1 is corporate tax, personal income tax is giving 26.3%, excise duties, etc. are giving 11.0%, and customs is giving only 5.7%. Then non-tax revenues are many sources of non-tax revenues are there. What are the various sources of non-tax revenues? For example, interest. Interest of loans given to states and union territories for non-plan schemes. Okay. Then we have interest on loans advanced to public sector enterprises, port trusts, and other statutory bodies. So whenever government lends to these various public sector organizations, etc., the interest earned will become one of the important components of non-tax revenue. Then we have dividends and profits. Dividends and profits from all public sector enterprises. Then transfer of surplus from Reserve Bank of India. Then we have petroleum license. This includes fees to get the exclusive right of exploration. So we have one income called as petroleum license, which is a non-tax revenue. Then we have power supply fees. Fees received by electricity authority from the supply of power under the Electricity Supply Act. So power supply fees. Then fees for communication services, that is Department of Telecommunication, will give us fees for communication services. Fees for administrative services like audit services, passport, visas, etc. Then receipts relating to defense services like canteen, stores, department, etc. All these are non-tax revenues. Then we also have broadcasting fees given by DTH operators, commercial TV services, commercial FM radio services, and so on, which is called as broadcasting fees. Then we have road, bridges, usage fees. We call them as user charges. Whenever we pass through these highways, we pay at the toll plaza, so we pay huge amounts, and that is called as road, bridges, usage fees or user charges. Then we have examination fees. That is, competitive examinations are conducted by UPSC, that is Union Public Service Commission, State Staff Selection Commission, etc., etc. Then we have fees for police services. Central Industrial Police Service Institutes is there, so we have fees for police services. Then we have sale of stationery, gazettes, sale of gazette, and so on. So non-tax revenue, tax revenue is the biggest source. But apart from this, we also have non-tax revenues from all these sources. And this income will cover the cost of services offered under various headings. So whenever we talk about deficit, we should talk about fiscal deficit as well as revenue deficit. And whenever we talk about fiscal deficit, we should talk about corrective measures. And whenever we talk about revenue deficit also, we should talk about corrective measures. That is how to fill the revenue deficit and fiscal deficit through various tax policies and interest policies. Therefore, monetary policy, because monetary policy deals with interest rates and so on. And tax policies are dealt by fiscal policy. So both monetary policies and fiscal policies are used in order to set right the deficit scenario of the government of India. Our constitution provides something called a budget. Every year, the government prepare their budgets, and budgets will include the allocation under various heads. And the state governments also prepare their own budgets. Until 1991, we had planned development because we had a planning commission. Then later planning commission was repealed and now we have Niti Aayog. We are not under 5-year plans anymore. Niti Aayog planning system is there. And under this planning system, we formulate annual policies, and all these annual policies, they refer to the tax policies as well as fiscal as well as monetary policies. Why we should tax is for sustainable development. Tax supports various functions of state, that is governments. And for economic growth, government has to spend money, and therefore one of the important sources of spending is its income from taxes, various taxes. And increasing revenue is necessary for India to finance various programs as stated in the development agenda. And our development agenda is very, very broad, because now we are talking about inclusive growth, inclusive development. So social spending for health, education, sanitation, social safety nets, all these come under inclusive growth. So as long as government is concentrating on inclusive growth, it has to spend more on expenditure like education, health, and so on. So obviously, taxation or fiscal policy has got many roles. Taxation has the role of revenue generation, first role, redistribution. That is, collect the revenue and distribute it to the needy. So redistribution. Then we have taxpayers, citizens. These are the various stakeholders: society, Department of Revenue, Ministry of Finance, Income Tax Department, Central Board of Indirect Taxes and Customs. Earlier it was known as CBEC, Central Board of Excise and Customs. Now this is known as Central Board of Indirect Taxes and Customs. So we have this Income Tax Department, CBIDT, Department of Revenue, Ministry of Finance, society, citizens, taxpayers. All these people are stakeholders in any tax related issues. So whenever we are formulating a policy on tax, we have to keep these three or four stakeholders, important stakeholders in mind. One, we have to concentrate on taxpayer equity, because as Adam Smith said, taxes should ensure equity. That means whoever has more income should be able to pay more. Whoever has less income will be paying less. So taxability is, tax liability is spread among the high income earners as well as the low income earners based on the ability to pay. So this is called as taxpayer equity. Second, we talk about tax productivity or revenue productivity. That means any tax policy should contribute to the revenue earning capacity, tax revenue earning capacity of the government. Unless taxes are productive, then there is no meaning in taxing. So therefore, we should look at from the point of productivity. Third important point is from the point of community. Taxes should help the community or the society at large in their welfare and so on. So we have to keep all these canons of taxation given. 10 canons of taxation are given by Adam Smith. We have to keep in mind all the 10 canons of taxation before formulating our tax policy. Tax to GDP ratio is an important component which we should always see that it is more. Tax to GDP ratio should always be more and increasing. So whenever we are designing a tax system, we should keep these points in mind. One is tax base. What should be the tax base? Should it be income? Should it be consumption? Should it be both consumption and income? Or should it be transactions? Before ending my session, I will talk about transaction tax, which is proposed by one think tank of the nation. We have a think tank in our country which is called as Artha Kranti. If Dr. Sandhya remembers, we organized a 2-day national workshop in Nizam College in 2002 in December. And we had one person from Aurangabad. He's an industrialist and engineer by name Anil Bokil. Okay. He proposed transaction tax, and he is the advisor for the present government, that is Modi's ministry. He is the key advisor as far as tax policy is concerned. Based on his advice only, our demonetization has happened. Now he is proposing for, he has been proposing for transaction tax, and maybe very soon we will also see a reform, major reform in the form of transaction tax scheme. So what should be the base of our taxation? Should we tax based on the income, that is income tax as we are doing at present? Should we tax based on the consumption? We are paying various sales taxes, etc., sales tax, etc. Should it be a combination of both, or should it be based on transaction? This is the first question we have to decide before we design the tax system. What is the tax base? Second question is, what should be the tax rates? Should the tax rates be flat? Should they be progressive? Flat rate means single rate. Progressive means we have different layers. Higher the income, higher the tax rate. Like we have a nil tax for below 2.5. Then we have 5%, 10%, 15%, 20%, 25%, and 30% tax rates. This is called as progressive rate of taxation. That is, higher the income levels, higher the tax rates. Then first question is tax base. Second question is tax rate. The third question is, what should be the unit of account? Should we tax the family? Should we tax the individual? Or should we tax the transactions? The fourth question is time period of account. Should it be annual or on a day-to-day basis? Whenever we have a transaction, should we tax it? So these are the four important decisions we have to consider while designing the tax system. I'll repeat them once again. What should be the tax base? What should be the tax rates? What should be the unit of taxing? And what should be the time period of taxation? Then who should levy the tax? As I said, central government can levy certain taxes and state governments can levy certain taxes and local governments can levy taxes. So the taxing powers in a federal nation like India, they are with all the three levels, the central, state and the local. Central government, of course, has got the major role because of direct and indirect taxes are under its control. Tax revenues earned by the central government are also shared with the states based on the finance committee's recommendations. Then we have several. Schedule 7 is there, which enumerates 3 lists. List 1, list 2 and list 3. List 1, only parliament is competent to make laws. List 2, state legislature can make laws. And list 3, both parliament and state legislature can make tax laws. So this schedule 7 gives rights to all the 3 levels. Then we have this major central state taxes: income tax, central goods and service tax, CGST, customs, integrated goods and service tax, IGST. Both CGST and IGST are collected by the central government. Then we have major state taxes. Among the major state taxes, we have state goods and service tax, SGST, collected by the state government. Then we have stamp duty and registration. Then tax liability in India is on individuals, on company, on limited liability partnerships. Then we have several flaws in the Indian tax system. Flaws are limitations or loopholes. The first flaw is complex laws. As I said, the definition of relationship, the definition of dependent is so complex that people fail to understand what is meant by relationship, relative, and who is dependent. So the laws are very complex even today. Then we have very high tax rates even today. Okay, though the tax rates have been reduced gradually. Then we have cumbersome process of filing payment and claims, which is being addressed now. Then we still have tax disputes. We still have the problem of tax evasion and tax avoidance. These are some of the issues which any policymaker should address. Then should we go for progressive taxation, which is income tax, and regressive taxation, which is indirect taxes? All indirect taxes are regressive and direct taxes are progressive. Now, before I conclude, I would just like to brief up what this transaction tax scheme as proposed by this person says. So, Anil Bokil has given the concept of transaction tax like this. He says, every transaction by the individual should be routed to bank, which will attract deduction at a fixed percent, say 2% of the transaction amount. Suppose I'm spending 100 rupees on a transaction, only 2% of this 100 rupees, that is 2 rupees, will be taxed. So for every 100 rupees, 2 rupees will be taxed, for example. And how this 2% will be distributed? Out of 2%, 0.70 will go to the central government, 0.60 will go to the state government, 0.35 will go to the local body and 0.35 will go to the concerned bank. So every transaction has to be taxed and every transaction has to be routed. That is, payment for transaction should be routed through banks, and the minimum currency note should be 50 rupees, not 100, not even 100 rupees. So if every transaction is routed through bank, by reducing the denomination of the currency notes, instead of having 5,000 rupees, 2,000, because black money is easy whenever the denomination is high. So black money is less, the scope for black money is less when the denomination is less, and the scope for black money or evading taxes is nil whenever we are paying through banks for every transaction that we incur. And since everybody is getting a share out of this 2%, he only gave an example of 2%. So every party, every stakeholder is getting a share of this 2%. Central government is getting a share, state government is getting a share, local body is getting a share, even transacting bank is getting a share. So this is referred to as transaction tax scheme. Instead of income tax, instead of consumption tax, etc., for every transaction that an individual makes, the tax has to be levied. This is one proposal, and I have simplified the proposal in a very brief manner, but there is a lot to think about this transaction tax scheme, because in India, the banking habits are still very, very poor. We don't try to transact through bank. We try to transact only by paying cash. So as long as cash transactions are there, he says the denomination should be very less, and we have to discourage the bank transactions. Everybody should transact through the banks. And perhaps that is the reason why Modi government has said that every person in India should have a bank account. So he is routing all the benefits through the bank account, and maybe gradually in the long run, we will see even this transactions tax scheme coming into effect. But as of now, there are so many reforms that have happened for good. We can say most of the reforms are benefiting the common man, the taxpayer, and the reforms are user friendly. And with technology as the enabler, I think there will be more transparency in the system. And I hope that tax evasion and tax avoidance will only be talked as history and not as the current problem for the Indian economy. So with these few words and remarks, I would like to thank the organizers once again for giving me this opportunity of sharing my thoughts with the participants. Perhaps I could not show the PowerPoint presentation because my PowerPoints are very, very cumbersome. I have not organized them properly because of lack of time. We were very, very busy with our autonomous inspection team till recently. So I just accepted Ravi's request because taxation is one of my favorite subjects. I like to deal at the policy level, and perhaps when he asked that I should take up heads of income, I said, let youngsters deal with heads of income because I'm not in touch with the latest provisions. So I thought I would deal only at the macro level. So I hope I was of some use to the participants who are attending this financial literacy workshop on taxation and GST. Thank you, Sandhya, for coordinating, and thank you, Ravi, for giving me this opportunity. Thank you, all the participants, for your patient listening.
Ma'am, your points were more powerful than the PowerPoint presentation. I would like to take if any questions are coming up from the participants. Ma'am, can we take any questions from the participants?
Hope
if they
I'll
have,
be able to answer.
in case,
Hope I'll be able to answer.
Dear participants, dear students, do you have any questions to ask? See, this talk is also available.
Sandhya, it is already 6 o'clock, and they have one more session to attend. I'm sure they must be very tired. So let us, if they have any questions, they can ask me individually also on my mail.
Okay,
I can
sure,
answer
ma'am.
them.
Sure, ma'am. Ma'am, your talk on fiscal policy, wherein you've explained the importance of the fiscal policy, how and when the fiscal policies are brought in economy in times of inflation, deflation, types and components of fiscal policies. You made the concept understand by us very crystal clear, ma'am. Thank you so much, ma'am, for accepting our invitation to be the resource person for continuous 2 sessions of this workshop and for sharing your rich knowledge with all of us. Thank you so much, ma'am. And then we hope that you would accept our invitation even in our future workshops. Thank you so much, ma'am.
It's my pleasure, Sandhya. Thank you so much.
Thank you so much. The next session will begin at 6:15. The next session is on the terminology, the basic terminology in taxation, which will be dealt by Professor Usha Kiran, and the session will begin at 6:15. So you have 7 minutes to go. The participants can move around and then come back. That will be a very interesting session. The next will be a very interesting session again. Venkatesh, will you share the attendance link?
Hello, madam.
Venkatesh, you may share the attendance link.
Okay, ma'am. Second, madam. Second session attendance.
అవును సెకండ్ సెషన్ అటెండెన్స్.
ఉషా కిరణ్ మేడం స్టార్ట్ అయిన తర్వాత చేయమన్నాడు మేడం సార్. హలో మేడం. హలో మేడం.
Oh, okay, Venkatesh. As soon as we start the third session, maybe you can share the attendance link.
Okay, ma'am. Okay, ma'am.
It seems that some of the participants could not give the attendance due to network vulnerability. You can share it again.
First one.
First one.
Okay, fine.
In case if the participants have not filled up the information in the attendance link which was shared, you can again fill it up now.
Dear participants, please complete the attendance process. Just now I post attendance link in the chat box. Please check your chat box. The second session attendance link will be shared later. Okay, when third session starts, we will share the second session link.
See, daily there are 3 sessions per day. For every session, the attendance link will be shared in the chat box. You have to fill up 3 times a day. Okay, so you can see in the chat box, session 1 attendance link is already shared. Whoever have not filled up, kindly fill it up. Once we begin the third session, the second session attendance link will be shared in the chat box. Yeah, second session attendance link will be shared once we begin the third session. We will begin the third session at 6:15. So dear participants, every day 3 sessions will go on. After the end of each session, attendance link will be shared. After the end of every session, attendance link will be shared. The content of the information to be filled up in every attendance link will be the same. Okay, don't get confused. Okay, so there are different links. Per day, 3 links will be shared. You have to fill up, you have to hit all the 3 links. All the 3 links 3 times a day, you have to give your attendance. Okay, that is how it will be recorded. Don't assume that it is a one link only for all the 3. No, 3 times the same link will be shared, but 3 times differently the attendance will be marked.
And also the attendance is a must for final e-certificate. Based on that only we will issue the certificate.
Don't forget to fill up the information in attendance, because based on your attendance only, e-certificate will be given at the end of the program. Tomorrow the session will begin at 2 o'clock. Tomorrow the session will begin at 2 o'clock. Per day you'll have 3 sessions. The first session will be from 2 to 3:30. The second session 3:30 to 5 o'clock. Then there is a break of 10 minutes. 5 to 5:10 you have a break of 10 minutes. Again from 5:10 to 6:40 will be the third session. Okay, so these are the 3 sessions. 2 to 3:30 one session, 3:30 to 5 o'clock second session, and the 5 to 5:10 is a break. 5:10 to 6:40 is the third session. So this will be the common schedule for all the remaining 6 days. Because today we had the inaugural, so 1 hour additional, additionally, it is being planned. Ma'am, అవునా మ్యామ్? ఓకే. పర్లేదు మ్యామ్. నేను వాళ్ళకి రేపటి గురించి చెప్తున్నాను. సో yeah. Madam is about to join. The next resource person is about to join. She'll join in short time. Yeah, we'll send you the attendance link once we begin the third session. Don't worry. We'll send the link once we begin the third session. So I hope that you all have, yes, today stay up to 8 p.m. Yeah, stay back. So you all are, I hope that you all are from the commerce background, maybe a few from the graduation and a few from the post-graduation, and then I'm sure that there are a few participants who are, into the teaching faculty from the different colleges. If you have any doubts in the area of the tax, like what is a tax? Tax is a major source of revenue to the government, as you are aware. right? Government mobilizes funds from various sources, right, to carry on the public welfare activities, and one of the major source of revenue to the government is tax. Okay, and these taxes can be classified into two types: direct taxes and indirect taxes. And I'm sure that you all are aware what is a direct tax. Direct tax, where the incidence and imposition is on the same person. When the incidence and imposition is on the same person, right? All such taxes we categorize under the category of direct taxes, and whereas the incidence is on one person and the imposition is on the other person, then we call it as an indirect tax, right? And among the direct taxes, you all must be very much familiar with the income tax. Yes, you'll have all the 5 heads of incomes, a set off and carry forward of losses, and then tax planning. You'll have the sessions on direct taxes as well as on indirect taxes. All the 6 days you'll have all the sessions on direct and indirect taxes, including the e-filing of income tax returns.
Madam.
Yeah,
Sanjay madam.
Venkatesh.
Please play about OU madam, Usman University. That video.
That one?
Yeah.
Okay. Madam is about to join. Usha madam is about to join.
Okay.
So, and she just called me up.
Okay.
So you all are aware that tax is the subject matter of central government, whereas the proceeds will be shared between the state and the central government. And when it comes to the agricultural income, we can classify the income into two types: agricultural income and the non-agricultural income. And when it comes to the agricultural income, tax on agricultural income is exempt under 10 subsection 1. I'm sure you all are from the commerce background, so you must be aware that under section 10 subsection 1, tax on agricultural income is exempt. Yeah.
Madam Jain madam.
Acha. Okay, so we have a resource person. Madam has joined back. So let us begin with the third session. Welcome, Usha ma'am, Usha Kiran ma'am. Venkatesh, mute your. Now we move on to the third session of the day, which will be delivered by our head Department of Commerce, Usmania University, who will discuss on the various terminology which are used in taxation. Dr. V. Usham, once again, because somebody must have missed out, so for their knowledge, I'm introducing the speaker once again, resource person once again. Dr. V. Ushakiran is a professor at the Department of Commerce and also is an honorary director at ICSSR SRC, director at Directorate of Placement Services, Usmania University. Ma'am has rich teaching and research experience, and her areas of interest include finance, accounting, and taxation. She has been conferred upon various awards, and very recently, Government of Telangana has felicitated ma'am with the Best Teacher Award. I request Usha ma'am to take over the session. Over to Usha ma'am. Venkatesh, can you make Usha ma'am as a host?
Madam is host ma'am.
Okay.
Good evening, Professor Usha.
Good evening, ma'am.
Professor Usha is there?
Yeah,
Yes,
I can see her in the list.
Okay, because I am finding her address here.
Yeah, she's there in the list, ma'am.
Okay. So, welcome back to the session. The last session, still 122 participants are there. I am very happy, Sandhya, for the enthusiasm of the the people.
Yes, ma'am.
I hope this will be sustained all through. That is another 6 days to go, and of course you'll have variety of sessions and practical approach will be given, and therefore I think it would be value add, and you will carry more knowledge with you. Uh, so now come back for our session. I'm dealing with all smaller things. I don't know whether Professor Usha already she has touched upon these points. So let me just share a PPT for you. One second. Sorry.
Madam, click on presentation, madam.
Yeah. Okay.
Click on presentation.
No?
Normally we can view, madam. Start the presentation.
Slide share presentation.
Slide share.
Slide share.
Slideshow. In the above there is a slide share. Show.
No, madam.
Which one? Next.
It is coming on my way.
No. Animation. After animation, there is a slideshow. Is there?
I know, but I'm not able to.
And just click on F5. F5. That should do.
F5 is.
Okay.
You are not using F5 also not working.
Slideshow.
No problem, ma'am. It is visible. It is visible still.
I have this bar above. Okay, I'm moving that. Right. So, slideshow from the beginning.
Yeah. Okay, ma'am.
Okay.
Okay, ma'am.
I'm going to move it down. Now, I'm just talking about the tax terminology. Not moving up and down, Venkatesh.
Press enter, madam.
Enter only I'm pressing. No. Is a problem?
Up and down arrow?
Yeah, both. That's right. I'll do one thing. I'll stop share and I'll go back.
Okay, fine, ma'am. Escape. Okay, ma'am. You can continue.
Try once again, but if it is not working, let me. Yeah.
Okay.
So there are some important facts if you like, definitely about the taxes. So just to see the title, I've said it is some facts about the T, and then later on you find axes. So these axes are nothing but the taxes which cut your income totally. So that is why symbolically I put this as T plus taxes. And definitely when you look at these two things, the first thing states that a fool and his money are soon parted. As soon as the money comes into the hands of a fool, the next moment they are parted. He doesn't know, like he or she doesn't know how to spend, and then both the money and food, they become a part. But rest of us, we people, we wait until income tax time, and whether we like or dislike, we have to pay the taxes. So we are, no less than the fools, not realizing that, income tax we have to pay definitely at the time when we have to pay. But, simply think that whatever we get, that is our income. However, remember that definitely we have to pay the taxes. So somebody is raising a hand. Let us have the discussion also, surely. And whatever points you have, I'll stop in between and then we can have the discussion. And the next thing what you have to remember is, it is, the taxes are like a gold. They're almost like a gold. You dive hard to get to the green, but you wind up in the hole. So that is the reason why, this particular, picture shows that how we are really, squeezed by the income tax department. And this is a, very famous quote of Benjamin Franklin, who says that in this world, nothing can be said to be certain except death and taxes. So whether you like or dislike, you'll have to pay the taxes. And remember, it is something like definitely, certain. These are the two words you have to think about, the death and taxes. So when you consider the death and taxes, you do not know like which form they are coming to you, but some form or the other, definitely you'll have to face them. Have you ever imagined that KCR will levy a tax? That is, whenever you are purchasing diesel or petrol, you'll have to pay 2 rupees per liter. Have you ever imagined this? No, we never imagined. Before service tax, have we ever imagined that we have to pay to the service tax? Even that, we were not really sure. So here you have to remember one thing, that whenever you talk something about the taxes, the taxes are there and definitely you have to pay, but the form is not known to you. Then we move to the next slide. Again, stuck, Venkatesh. Hello.
Ma'am.
Let me share these things like therefore problem. I'm just stopping this share. Okay. And I'll go for slide only.
Instead of the full share, you just, maybe you can move across the slides, ma'am.
Madam, press escape, madam. Escape.
And then
Click on escape, madam. I think your system
is all right because daily I'm can't blame the system.
Okay. Okay.
Why did there some?
Madam.
I am not.
Madam, click on escape, madam. Escape button.
Escape button.
Okay.
I'm not finding yeah. taxation in India, we have got an authority to levy tax in India, wherein the authority comes from the Constitution of India. And the Article 265 says that no tax shall be levied or collected except by the authority of law. So as per Article 265, even if any government would like to go for a tax thing, so it must follow the constitution and then it must make a bill, and accordingly it can levy the tax and collect the tax. So any tax must be supported by the authority of law. For example, this workshop is going on, and if we say that registration fee is there, the fee cannot be considered as a tax. Instead, I say that 200 rupees is the registration fee, and then you need to pay 100 rupees tax. So I'm just coining that 300 rupees how I am collecting. So 200 rupees towards the registration and 100 rupees towards the tax. Will you accept that? You should not accept, because I have no authority and there is no law which says that I can collect 100 rupees from you as a tax. Therefore, what we have to understand is, if any tax is to be levied, if any tax is to be collected, definitely there should be an authority of law. So you have to make the constitution, as per the constitution, you have to make the law. So how do you make the law? For that, already I have stated that Constitution of India is the origin. And you've got Schedule 7, which talks about the various lists. All of you are aware that list 1, list 2, and list 3. So when you are talking about list 1, you take the areas on which the statutes can be made only in Parliament. That is, both the houses of Parliament, they'll have to discuss, they'll have to bring in the bill and they'll have to discuss. And only after the discussion that takes place in the Parliament, both the houses must accept, then the bill will go to the assent of the President of India. And once the President gives his assent, then it becomes a law. So that is relating to the areas on which the laws can be made by the Parliament. Then similarly, certain issues are only relevant to the states. So in such cases, what happens is, in states, if we have both the houses, that is Legislative Council and Legislative Assembly, in both the bills, in both the houses, the bill has to be passed, and then it will go to the governor, and governor signs, then only it becomes a law. So this is fully with respect to those areas where state has got authority to make the law. But certain cases, you have got both the state and center which have the authority to make the law. For example, education. So you know very well that there is now education bill, new education bill. So this new education bill is nothing but, it is brought out by the central government, and once it is brought out by the central government, it will be definitely discussed in the Parliament, and later on, if the Parliament decides, that becomes a bill. So from the central government it moves, but at the same time, remember, states have got their autonomy in case of education. So even they have to make their own bills, and accordingly, in their legislative councils and assemblies, they will have to discuss this matter and make the bill, and then only they can really think, something in terms of bringing out the bill. You take, for example, GST. So when GST bill was passed, it was, the central government never had any kind of say in that. So all the taxes that were levied, like state taxes, all those taxes for which the state has to make the bill. But GST being one tax and one nation, there was a constitutional amendment, and as per the constitutional amendment, what happened is the central government has made the bill, and later on, it did not stop there. Later on, what happened? Uh, all the state governments have to make their own bills. That is the reason why you have the bill, GST bill by Telangana government, GST bill by Andhra Pradesh. Like that, you have got various bills that are being passed. So in this way, you find that whenever the constitutionally, if you are not getting the authority, then there may be a constitutional kind of amendment, like in case of GST, and that is how GST has come into picture. So you'll have to remember that list 1, list 2, list 3, what are the areas, on which areas really, pertaining to the taxation, which areas the state government has to make the bills, or in which areas the central government has to make the bills, or in which areas, the recent one being the GST, how the state and central government will make the bills. That you will have to remember. And earlier union list, we used to have customs, income tax, and of course GST. Only 3 I have taken. Because after GST, like earlier to GST, we have had so many taxes, like central excise tax and so many other taxes. But now got only Customs Act and Income Tax Act and GST, which are in the union list. And similarly, in a state list, we have got some other taxes like motor vehicle tax or passenger goods tax or entertainment tax, electricity duty, and so on, so forth. Even agriculture income comes under the state list. So these are the examples. So let us just see like what is the exact definition of a tax. So when we are looking at the definition of the tax, remember this definition tells us as to what extent, like what way we can really consider a particular payment which goes to the state or which goes to the government in such a way that we can call it as a tax. So it is enforced proportional contribution from persons and property levied by the law-making body of the state for the support of the government and all public needs. So beautifully, this particular definition tells us that it is enforced. It is something like it is to be levied by the government. So it is enforced. It is not voluntary. It is enforced, and it is a proportional contribution. Why we call it as a proportional contribution? It is a proportional contribution because when you pay income tax, you are paying income tax as per your income tax, as per your income level. And similarly, you are paying something like indirect taxes. You are purchasing lots of grocery, and if you are purchasing lots of grocery, whatever is the tax that is payable on the larger quantities, you will be paying that. So always your taxes are proportional to your income or to your purchases and so on and so forth. They may be paid by the person or they may be with respect to the property. That is the reason why we pay property tax when we have houses or something like that. We pay the property taxes. Persons pay the direct taxes and indirect taxes, and always these are by the law-making body of the state. So whether it is a state government or central government, and remember the entire contribution is used for supporting the government. They are incomes to the government, and they are used in meeting the public needs. So the other definition says that the act of laying a tax, that is the process, is that it is by sovereign. Again, you refer to the constitution, to its law-making body. Again, law-making bodies are nothing but your parliament or your state legislative council or assembly. Raises revenue, of course, it is a revenue to the government, and to meet the necessary expenses of the government. We all know that the taxes are paid by us and they are used for the sake of laying down the infrastructure or towards the welfare schemes or towards any other things what the government feels necessary in its spending. And when we look at the taxation, remember we have got two aspects of taxation. What are these two aspects? One is the levy and the other is collection. So as far as the levy is concerned, so from the beginning I was telling that when you are referring to the levy, whenever you are referring to the taxes, these taxes are nothing but they are levied and they are collected by the support of the law. That is what I've said. Even the Article 265 says, without the support of the law-making body, you cannot levy, you cannot collect the tax. So these two aspects, one being the levying and the other being collection, how do we take it? So when we talk about levying is nothing but imposing. So who will impose the tax? It is automatically the governments impose the tax. And where from the government gets the authority? The government gets the authority from the legislative act. That means for levying a tax, definitely there should be a statute. So income tax, when you are paying income tax, you will look at a particular tax act which states that you have to pay income tax. And these are the various provisions. And these are the various the necessary explanations. These are the jargon. So like that, everything is defined in such a manner that there will not be any further disputes in the future. Of course, the disputes arise whether even if the law is so nicely laid down, but still there are ways of interpreting the laws. But remember, definitely there should be a law. So income tax is levied on the basis of the income tax act. GST is levied on the basis of the GST act. So like that, definitely there should be a legislative act. Legislative act in the sense the bill is introduced and the bill becomes the act only when it is discussed and only when the president or the governor signs on that. Then you consider that as the act. The second aspect is collection. So collection of the tax is nothing but it is more of administrative in nature. So why do you call it as administrative in nature? It's simple because once the government levies the tax, remember, it has to be collected. There must be a mechanism through which the taxes have to be collected. Once upon a time, we used to have the mechanism, this kind of administrative mechanism, which was very, very complex. But now with internet and with websites and easy way of filing returns and all, the administration is now going very close to the people. That is the ones who are paying the taxes. And recently, there was a proposal by the central government which states that every time, there should be a charter for the taxpayers. What do you mean by this charter? This charter is nothing but it tells what are the rights of the taxpayers and how much responsible they should be and what are their rights. And each person, each taxpayer should know his rights. I am paying tax, so I have got some rights. I should know what are my rights. That is the reason why the Charter of Rights is being, is being made by the central government to gain confidence of the taxpayers. So earlier, it was something like taxpayers were treated as if they are supposed to pay, it is their responsibility, and the government has only controlling authority. Now, this kind of attitude on part of the government has gone. Now you find that the refunds are becoming easy. The moment you identify that you have a your return says that you require a refund, then it just weekdays or 10 days we are getting a refund. However, smaller the amount is, or however bigger the amount is. So I was surprised at one stage where I got a refund of 39 rupees, because when we file a return, we show how much tax we have paid and how much tax we need to pay. And the difference was just 39 rupees. I thought they'll not pay me 39 rupees. But anyway, that shows, whether you like to take the amount or not, that shows that it is a refund. And I got a refund of 39 rupees. So easy, isn't it? So earlier it was in the form of check, but now they are directly crediting to your bank, and they give information that refund is given. And the attitude of the government or the attitude of the administration is changing, and the collection of tax for which various technologies are being used, and the officers and the various administrative all other remaining mechanisms, they are very going close to the taxpayers, and they are saying that okay, you are paying tax, and that is how you are very much we have to respect you. This way, I would like to bring to your notice. They have introduced recently that whoever pays certain level of tax, they are given bronze medals, and some people have got the silver medals, and some people have got the gold certificate. So the tax department, the central government, it is issuing that you have paid so much of tax during this financial year, therefore you are getting this particular certificate. So they are going very close to the taxpayer. And even the recent one of the reforms, which is known as Vivad se Vishwas Tat. Vivad se Vishwas Tat. It is nothing but you are moving from the tax dispute, that is Vivad. From there, we are moving towards a phase which is called as a Vishwas. That is, the government is trying to gain the confidence of the taxpayer. So they don't want to go into the disputes, and they want to show a simple solution for whatever is the dispute that is being raised, and they want to gain the confidence of the taxpayer. So collection of tax is one aspect which is to be perfect. Similarly, levying of the tax is again another aspect which is to be considered as very, very important. Without levying, there is no collection, and without collection, there is no meaning for levying. Simply, the government levies the tax, and then it doesn't have any mechanism to collect the tax. In such a case, what happens? Then whatever is being levied as tax, it is useless, because there is no mechanism to collect the tax. Therefore, remember, levying is one part and collection is another part, and both of them should work in a right direction. Then we look at the basic principles of sound tax system, like there should be fiscal adequacy, in the sense that the government should have on its hands the sufficient revenue, so that whatever is the public expenditure, that expenditure is being met by the government. So this is considered as the fiscal adequacy. Then you have got the other one, that is equality or theoretical justice. So this equality or theoretical justice is nothing but the tax burden should be proportionate to the taxpayer's ability to pay. That is the reason why we always say that if you take 5 lakh and lower income, you feel that the income itself is so low, and if you levy tax, then it would be a burden on the tax on the person. Therefore, you give some exemption. So, up to some extent of income, you don't levy any tax. And as you are moving from that slab to the next slab, then you keep increasing the tax percentage. So one slab may be 10%, and the next slab, as you proceed, it will be 20%, and as you are proceeding to the next slab, that is the maximum amount of tax, the percentage of tax that is being collected is now 30%. So if you add cess and all other things, it comes to 33.13% or something like that. And just very interesting thing is way back, that is when Indira Gandhi was the Prime Minister, the tax rate, if you see, like before emergency, the tax rates were so high, and it amounted to almost like 93% of your income goes into the tax. But now, slowly, the tax rates have become so proportionate, and it is not just penalizing the ones who are earning income, but they are matching with the ability of the taxpayer to pay the tax with their income level. So just imagine if I'm getting a salary of 2 lakhs, and if 90% of it goes in the taxes, how much amount I take home? Just imagine. Can you just think of such kind of tax slabs? But earlier it was like that. But now, when you look at year by year, when you are looking at the tax reforms that are being introduced, now we are in such a zone where we have to pay the maximum amount, that is 30% in the slab, and then of course you have got cess and all other things. Then the next point, what you have to remember is administrative feasibility. So as I was talking about the collection of the tax, remember, if there is no feasible effective administration, there is no way of collecting the tax. Therefore, always the government should look at the administration part. Therefore, all the tax laws should be capable of convenient, just, and effective administration. That is the reason why in almost all the tax acts you come across that the mechanism of the hierarchy of officers you get, and if there are disputes, how the disputes have to be resolved, even that is being given, and everything is transparent, and you can question, always you can question. Therefore, when tax laws are made, remember the tax laws themselves should also provide as to what is the hierarchy of administration, and where you should be, where the taxpayer should be approaching, for what purpose, and how that person can be approached. If you look at the present website of income tax, you will find that if you have any kind of dispute, then they are displaying like whom you have to contact with the phone numbers and all. Earlier, we never used to have this kind of information. So we had to go to the income tax department and find out who the concerned officer, and then meet him, and to meet that officer, we had to take lots of trouble and all. But now it is not so. So simply, you are given the phone numbers, and you can catch hold of the officers on those numbers, and you can approach them. Therefore, always your administration should be effective administration, and it must be convenient to the taxpayers, and it must be fairly fair enough to see that people will get really the needed information and needed kind of justice what they are looking for. So now let us look into the characteristics of tax. So I've been telling you that it is a kind of enforcement. In the beginning itself, when we were discussing about the tax definition. So as I said, it is an enforced contribution, not a voluntary payment or a donation. Supposing you are getting something like 2 lakhs per month, and there is COVID-19, and you're so you feel that you should do something. Then what you do is you donate some amount to the government, stating that okay, let me give 1 month salary towards the particular PM's relief fund or whatever it is. If nothing is mentioned, simply you tell to your officers that whoever is deducting whoever is paying the amount, you just transfer this amount to any of the accounts of the government. Then when you are calculating the tax, can you say that whatever you have given towards COVID, that becomes your tax? You can't, because it's a voluntary payment which you wanted to give on your own. But tax is something different. Therefore, whatever you pay as voluntarily, or maybe in terms of donation or something, you cannot take that as a tax payment. So it is something which is enforceable by law. Then only you will have to say that it is a tax. And it is imposition in such a way because you don't ask the people that whether you like to pay the tax or not. Simply you are given a statement that you need to pay the tax. Therefore, remember, whenever your assent or your willingness is not asked, then it is enforceable, enforced contribution. If somebody asks, if some government says that, okay, I'm going to levy a tax of 2 rupees on petrol, would you like to pay? Those who are willing to pay, you pay, and those who are not willing to pay, please do not pay. If such statement is given, then can you say that it is tax? No. The tax has a characteristic that it doesn't take into consideration whether people are willing to pay or not. Simply it is to be paid. That's all. It is an order by the government stating that so much tax is to be paid. And second thing is, it is generally payable in money. So you can't say that this year I don't have money, so I'll deposit my ornaments and take them as tax. You can't do that, because whatever way you are earning the income, in terms of legal tender, that you have to pay towards the tax. It is collected only in the form of a tax. And it is proportionate in character. That's the point already we have discussed. Similarly, it is levied on person or property. Even this point we have discussed. It is levied by the state which has jurisdiction over the person or property. Supposing your property is in J&K, but you belong to the Telangana state, then can Telangana state really ask you to pay tax on the property which you own in some other place? It can't. Therefore, you will have to see the jurisdiction, and according to the jurisdiction, the taxes are being levied. So the property must be in the area of the taxing state. Here, I would like to just bring in GST. Earlier, GST was levied, or the taxes VAT was levied in such a way that VAT was collected in the originating state. That is, wherever the manufacturing takes place or wherever the trade takes place, then in such a state, the taxes were collected. But now, it is a destination point. So what is this destination point? If you are manufacturing goods in Telangana, And if you are selling the goods in Tamil Nadu, the Tamil Nadu government has the jurisdiction to levy the tax. Just because the goods are from Telangana, the Telangana government cannot levy the tax. But earlier the rule was something different. Therefore, jurisdiction of the subject is very, very important. Where exactly the tax can be levied, that you have to remember. Whether it is person or property or any kind of goods, sales, etc., etc. You'll have to see that the person or the property must be definitely in the jurisdiction of the taxing state. Then only the tax can be levied. That's one important aspect. Then, having understood the characteristics of the taxes and the aspects of taxation and also the definition and all. Of course, these are very, very basic things, but I've put these things because I thought that there may be some people who are from other areas, not from the commerce, but maybe we have got some PG students from other areas. So keeping those people in mind, I've put this terminology. So let us just go by this terminology. The first thing is assessment. So what exactly we mean by assessment here? The year in which the taxes are being assessed, or the income is being assessed, then you call that year as the assessment year. And the previous year is the year in which the income is earned. So let me give you an example. Supposing this year you are earning the income, that is 2021, you are earning the income. And this particular income being earned in the year 2021, you call this as the previous year. And when do you think the assessment is complete? The assessment gets complete in the next year, that is next year to the previous year. So if 2021 is the previous year, then 21-22 will be your assessment year. So when we consider the assessment year, just remember, it is the year in which the entire assessment gets over. What exactly we mean by assessment? It is nothing but where the tax returns are filed, where you verify your tax returns, and where even the department verifies whether you have filed the returns or not, and refunds take place, and they give a certificate that okay, your returns are filed, and they acknowledge and they verify, and as per their verification, if everything goes smooth, they issue that okay, this is your final return. And once you receive this, for all this you take some time. The entire process takes place in the assessment year. But when are you earning this income? This income is being earned in the previous year. So there was a move by the central government once upon a time. Still, every time they keep telling that, let us go for some changes in the direct tax code. And accordingly, they say that let us ban the previous year, assessment year, so on and so forth. But so far, nothing of that sort has come into picture. And we still have the concept of previous year and the concept of assessment year. And sometimes, in some cases, some exceptions are there. So the general rule is the income earned by the previous in the previous year are taxed in the assessment year. Then there are some exceptions to this general rule, where where there is a shipping company, that is non-resident shipping company, or in case of a discontinued business, or where you're stopping your business abruptly and then you're closing down the business. In such cases, what happens is the previous year itself becomes the assessment year. and the non-resident is going out of the country and has no intention of coming back. In such cases also, previous year becomes the assessment year. So like that, there are certain exceptions to the rule which says that previous year's income is to be assessed in the assessment year. Such exemptions prevail, you will have to remember. Then comes the person. Who is a person? Person is the one who is supposed to be paying the tax. Of course, it comes into the taxable income. Like if the person has taxable income or not, the person has to show sometimes whether he is to be he or that organization is to be assessed. So we have got as per the Income Tax Act, individually a person, that is you and me, who get the income, we are assessed and we become the individual person. Then similarly, company is identified as a person, wherein the company has to pay tax for all its income. Similarly, Hindu undivided family, we have got the firms, the partnership firms, we have got the body of individuals or association of persons, or you have got the local governments, and you have artificial juridical persons. All these are known as the person. So they will have to look into their incomes, expenditures, etc., etc. And then if they come in the taxable, the scope of the taxable income and all, they need to file the return. And even if there is no taxable income, sometimes companies, Hindu undivided family or companies, firms, etc., they need to show the loss return at least. So for the convenience sake, the Income Tax Act has identified all these categories as the first. Then who is an assessee? Assessee is a person who has to pay tax under the Income Tax Act. So who has to pay the tax? The one who has taxable income is known as the assessee. So he must pay the tax. Similarly, if any other amount is need to be paid under Income Tax Act, something like interest, penalty, etc., etc., even those persons are considered as assessees. When tax is to be paid on behalf of the others, even that person is considered as the assessee. For example, you have a minor daughter or minor son who is who is getting some income, not out of his skill or her skill, but because some amounts are being transferred by you or by parents or by any relatives, etc. They have put it in deposit and they have some share in the business. By all that, they are earning income. And since the boy or girl being minor, they can file the return. So their incomes are being clubbed with the incomes of the parents whose ever income is high. Then accordingly, you are clubbing the incomes. You are responsible to file the returns on behalf of somebody under the clubbing council. Or similarly, if there is any legal representative, then legal representative need to file a return on behalf of the others, like for whom this person becomes the legal representative. Or the assessee can be somebody like government authority, where the person has collected the taxes, and on behalf of somebody, the taxes have to be deposited. So these are the various categories where you can call that person to be an assessee. Then comes the income. So what is this income? Income is defined. Income is defined in Income Tax Act as a list. Some list is being given. At the same time, the Income Tax Act says that it is a way like the list, whatever list is given, it is inclusive. In the sense, you can add some more income. So something like dividends. Dividends is considered as income, or the profits from the business are considered as income. You may say salary is an income. You may say that rent you are receiving from your house property is an income. You may say that income received from agriculture is again income. So it is something like a big list is mentioned, and based on that list, not only that list, but any new thing where you are getting the income. So even those things can be included in the definition of income. Remember, it need not be you need not be getting the amounts in regular period. Sometimes you may be getting it only once in the year, something like dividends. Dividends you may get from a company. Maybe every 3 years the company pays you. So you cannot claim that I am getting this dividends only once in 3 years. Therefore, it should not be considered as income. It is not so. So definitely you'll have to say that you are considering that income irrespective of the fact whether you are receiving it continuously, periodically, or you are receiving it at one time. So like that, you have to see like how you are getting it. Supposing you are giving some amount to your mother and stating that, okay, I am giving it regularly to my mother. So now onwards, whatever I am giving every month to my mother, that becomes her income. Can we really consider that as her income? No, because it is, you are giving out of affection and maybe something like a gift and all. Therefore, you cannot say that you are not considering this as your income. So first of all, you pay tax on it. Maybe you are paying that to your mother. That is something different. But you will have to pay tax on the income. Just because you are voluntarily giving something to your mother or something like that, then you cannot claim that this is not my income. So you have to remember like what is the nature of the amounts what you are receiving, and whether you can consider them as incomes or not. Then you have got exempted income. So Income Tax Act gives you certain incomes as exempted income, and these exempted incomes are nothing but under Section 10. You have a big list like agriculture income, or certain incomes received by the parliamentary members. Certain things like if you are working for UNO and all that, so where you are receiving some amounts as your salary or something like that, all those are your exempted income. Better you refer to Section 10 and see like what are all the exempted income. So while considering your tax calculation to the income tax authorities as to what are your incomes and what are your exempted incomes. So you can claim that your income includes this. At the same time, your income is to be exempted because it belongs to the concerned section, Section 10, and accordingly, you need not pay tax on that. Then we have got another term, various terms we keep using: tax, cess, rates, duties, and so on and so forth. Whether there is any difference between these words. So when you look at the tax, cess, rates, duties. So in one way, like when we are referring to the various legal decisions that are given by the courts, we consider that, as per those rulings, all these words are almost similar. So there is no point in saying that tax is something different from cess, which is something different from rate, which is something different from duty. This is what, it was very interesting for me to identify whether there exists any difference or not. So for that sake, I have referred, some of the rulings that were given on these words. So a few of the judgments, they stated that there's not much difference between all these words. All these words refer to one characteristic, that is, it is something like, it's a enforced amount, which is, proportionate, and which is levied by the authority of law. Therefore, all of them are to be treated on the same way. So that is what I found in all these a few of the judgments. Then normally, when we look at the word duties, so we refer this to the customs duties. That is what we say. We never say custom taxes. Okay, taxes of customs. We never say, but we say duties. And cess, when we are looking at the cess, we say that cess is levied like municipality, the power cess or the municipality cess, something like that, where it is, something like, what happened?
Ma'am, once again you share it, ma'am. It's just gone.
So where are we? I think we are in
resume.
Taxes, tax, cess, rates, etc. Yeah. So cess is maybe education cess, what we see when we are paying the income tax. Specific amount is mentioned, and accordingly the cess is being calculated. This is in case of the education cess and all that. It is calculated on the tax. That is something like a tax on tax. So supposing you are paying 50,000 as tax, then in that case the cess will be calculated if it is, let us say 1%. Then 1% on 50,000, we consider that as cess. But basically, when I looked for the difference between these words, I never found any difference as per the judgments. Okay. Then comes the word clubbing. Clubbing is nothing but it is something like, I gave already one example where you have a minor child and who has some income, and that income source is not by way of the skills where the child is getting. If the child is, getting these incomes, maybe by singing or by participating in dance or, something like that, or maybe winning the prize, not that way, but because of, some uh, something given to the child in the form of, business share, or in the form of, shares being given to them, or maybe giving some amounts and making them fixed deposits, and by virtue of the interest, the child may be getting some amount. So the source is not the person, as if, the person is earning this income. Therefore, in such a case, you will have to club the income. So by clubbing the income of the minor child with that of the parents, where you just add that income into the gross total income of the person, and that is how you use the clubbing provision. So not just a minor child, but you have got something, some other points also, like where you have transferred the house property or in some property where you are getting some income, and your idea is to transfer the tax liability to somebody else other than you. So even in such cases, you club the income. So there are certain provisions in the tax law where it says that definitely the incomes and by so and so transactions, by so and so people, they have to be clubbed with the person's income, like who is the correct origin of earning the income. Then comes the deduction. So deductions are nothing but when you consider the total the income, the gross total income. Let me just spend 1 minute here. When we are referring to the gross total income, you know very well that the Income Tax Act has identified the sources of income. Income may be from salary, income may be from the housing property, income may arise from business or profession, income may arise from the capital gain, and if you are not able to consider the income in any of these four categories, then you will have to put that income as income from other sources. So these five are the sources exactly from where you generate the income. So whenever you come across the incomes under these specific heads, that is what we call them as heads of income or the sources of income. So whenever you are talking in terms of those heads of income, then what you do is you put all of them into one place. Like you add each one after allowing their specific deductions under that particular head. You add all of them, and then you call that as a gross total income. So now from the gross total income, you have certain deductions available to you, right from the section 80C to 80U, and all those deductions which are known as the deductions from the gross total income, you will be applying them. So those deductions which are available from the gross total income are known as the deductions. Then you have another word called exemptions. Exemptions, already I have told you that your income may be an exempted income. So you may say that, okay, this income is exempted income. So you have got some of the income which are partially exempt and some of them being fully exempt. For example, you have got the HRE, that is house rent allowance. And to the extent of the rules that are framed, you will say that you are receiving the amount, but you apply those rules, and to the extent whatever rules permit, you will be exempting that particular portion, and remaining portion you will have to show as if it is your income. Therefore, exemptions may be fully exempt or they may be partially exempt. So like that, you will have to see where exemption provisions are available, and you will have to make use of that. Then you have another term called relief. So this relief is nothing but the relief is given to those persons like where they come under some slab of income, let us say 5 lakhs. And if the person's income is 5 lakhs or so, then to some extent some relief is given by the Income Tax Act. Or if you have in 1 year, supposing you are getting some areas of salary, and these areas of salary belong to various years, earlier years, but all of a sudden you are receiving that amount, then it is unfair on the government to say that now you pay the tax. So if the present tax structure is low, for you it is a benefit. But earlier tax structure was low, now it is high. Then in such a case, you feel that, okay, this amount was not received during those years where the taxes were very low, but now the taxes are very very high. I am receiving this amount. So to not to give any hard burning to people, such people, or to see that the amounts what you are receiving at one time as arrears and all, sometimes you grant a relief. The relief is granted in such a way that you calculate as if you are receiving the income in those years, what would have been the tax liability and what is the tax liability now. If there is a difference which is favorable, then in such a case, to that extent, the relief is given to you. So that is called as relief. Then you have rebate. This rebate is I think I was quoting something about the exemption, the 5 lakhs and all. So there, we actually for this rebate we can use that example. This rebate is nothing but if you belong to a particular slab and then the government automatically it is giving you some rebate. Like now I think it is around 1250 or some amount they are giving as the rebate. So from the government side, from the act side, you are getting some specific amount that you can take this as a rebate. That is what called as a rebate. Then we have certain terminology which is used as tax planning, tax management, tax avoidance, and tax evasion. You have a specific class on this. Therefore, I am not touching upon these areas. Then gross total income already I have told you. Then the next one is taxable income. So once you apply all the necessary deductions and etc., you are left with the taxable income on which you will be paying the, you will be calculating the tax. So once you calculate the tax, then remember you will have to calculate cess on that, and that is the amount, the total amount of tax which you have to pay. Remember, once you arrive at the gross total income from your own source, then you have to have the clubbing provision, and then you have to go for the deductions, and then you have to calculate the tax, and then you have to calculate the cess and all, and add that to the tax calculated earlier. Then that becomes the total amount of the tax which you need to pay in a particular assessment year. Then you have a session on advance tax also. Then that will be dealt. In other words, let me just touch upon this. Wherever the person is assessing himself or herself, then where the tax liability exceeds, if I remember rightly, 5,000, then in such a case the advance tax needs to be paid. So you need not wait. Some dates are being mentioned, and then as per those dates you need to pay the tax. If you are an individual, if you are a Hindu undivided family, if you are a company, so various dates are being mentioned, and in some percentages and also in some installments you need to pay the tax. So that is called as the advance tax. Then we have the other word called TDS, that is tax deducted ex post. So normally whoever is paying the amount, especially in case of salaries and in case of other official payments, generally the person who is paying the amounts is responsible to collect the taxes or to deduct the taxes. So if I am a salaried person, so every month I need to pay some tax if I am in the taxable rate. Then that way, the person who is deducting tax on my behalf has to deposit this amount with the income tax department. So now it is almost like your advance tax. And whenever you are talking about the tax, the total tax which you are paying, when you calculate, now see how much of advance tax is being paid, how much of tax is deducted at source. All this you refer to 26A, the form which will be dealt by one of our colleagues. And the TDS you will understand like how much is already being paid. All that you need to deduct, and then you have to say that the remaining amount is to be paid as tax. Similarly, you have tax collected at source. So some of the cases like alcohol, in such cases where the where the person is responsible to collect the tax has to collect the tax at the source itself, and then must pay on behalf of the person who is supposed to pay the tax. So that is called as tax collected at source. Even that you have to take into consideration. And you have the other two words which are known to you, of course, PAN and TAN. PAN is a permanent account number which identifies you as a taxpayer. It is a unique identity, and nowadays it is identified as a identity card also. But be careful, don't use your PAN card as if it is a something like identity card. Whenever you want to use, don't show it, because there sometimes you may get into trouble, because if somebody knows your PAN number, if they are purchasing some jewelry or something like that, they may quote your PAN, and then they say that unless if the PAN card is to be given as Xerox, then of course there is no problem. But otherwise, what happens is simply quoting the PAN, then somebody else can do transactions. Therefore, be careful with your PAN. There is a procedure to obtain PAN. If you have not obtained so far, some of the students are there. Please do take, and you need to apply online. Nowadays, it becomes a very easy process for you. Only thing is, you have to give all the details whichever are necessary, whether you earn income or don't earn. Generally, they will ask you what is the source of income and all. But giving all necessary details, if you are applying to the income tax department, they will issue the card. It will have the number, the unique number. In all the cases, like whatever transactions you are doing, in such cases you need to use the. Supposing you want to open a bank account, then you require PAN. Without PAN, there is no nowadays there are rules that to open the bank account also you have to show the PAN. So KYC now say that definitely you should have the PAN card. Similarly, you want to vet yourself and do some kind of investment, because your parents are giving you some pocket money which you don't want to spend simply, but you want to invest, and you have chosen a mutual fund as your way of SIP, that is systematic investment plan you have chosen. And if you want to contribute to this, definitely you should have a PAN. So in some transactions, what happens is you require PAN, which is a must. So nowadays, without that, even I'm getting a warning from the fast track, wherein while crossing the toll gate, I need not wait. No, nowadays, there is a simply we can go once our car is tracked with the first. And there also I'm getting a warning every alternate day that I need to upload my PAN. Otherwise, they are not going to allow it. So therefore, remember, this is very, very essential for all the persons. Wherever you are asked to deposit that or show it as a proof, you will have to show. So that is how you need to look into the PAN. It's very important aspect. Then comes the returns. So returns again will be dealt by one of our colleagues. Therefore, just remember that returns are nothing but you will have to show whether you have taxable income or not, but you have some criteria that you own a car, you own a credit card or something like that. Earlier we used to call it as 1/6 formula also. Then you need to file the return. So it is nothing but such kind of rules are being framed because the government wants to have more and more people as a bigger tax base. So in reality, all the people may not pay tax, but still they'll have to file the returns. That you have to remember. And we have got various types of returns that will be dealt in detail. And remember, some of the companies and all other things, if they want to claim certain deductions, now it is a must that return has to be filed. And do not think that returns are filed only when incomes are there or profits are there. So even if the company runs into losses, the loss return has to be submitted. Then only all kinds of deductions, whatever have been, whatever the company wants to claim, that can claim only when the return is filed. Then comes the verification. So this is being introduced newly. I think for the past 3-4 years, they are asking this, that it's not sufficient if you file a return, but you'll have to verify. So authenticate your return. So this authentication of return is nothing but either through your bank or ATM or using a one-time password and so on. You can verify. That you can authenticate that this is a return submitted by you. So it is a must now. If you are not giving this kind of verification, like we have two things. One is verify using this, or else you need to post your return. Take the acknowledgement or take the printout of your return and then send it to the concerned authority for the verification point of view. And then once they receive it, they will say that they have received it and they acknowledge, and then they say that after the assessment is over, they will again return to you stating that okay, your returns are now submitted. So this way you can have an electronic verification, or sometimes you can leave it as if it is posted. You just take out print and then sign and then post it. This becomes a big process, but nowadays most of the people are using websites and all that very conveniently and easily. Therefore, most of them are going for the electronic verification. Then comes the residential status. This residential status is very, very important. It is because the residential status decides as to how much is the tax that is to be paid, what incomes are taxed, and so on and so forth. And then comes the new tax structure versus old tax structure. So as far as the new tax structure is concerned, it is something like this assessment year onwards we have a new way of taking whether as per the new assessment year, what happens is most of the tax structure has undergone a change. Now we have got 7 slabs. Earlier we used to have 3 slabs, I think 10%, then 20% and 30%. Now there is a change. So in the new regime, you cannot have all deductions. Some 70 deductions have gone. So now you have to choose between whether you go for the old structure or the new structure. So accordingly, what you do is you go for calculation of the tax under both and see whichever is profitable to you. In other words, where you pay the less tax and you choose that particular tax structure. That you need to give as declare it in the beginning of the assessment year itself, and then say that I am falling into this particular sector. So that you can go through all 7 flags and what are the exemptions that you cannot avail. And under the old structure, what are the exemptions and what are the deductions that you can avail? Which one is it? If you are a newly entered person into the employment or new into the business and all, in such a case, better you go for the new tax structure. If not, if you have already planned out your deductions and all that, in such a case, better go for the old tax structure. So actually, I thought of talking about residents and non-residents, etc., etc. But these things are anyway available in any textbook. Let me stop here. But just one word about the residential status. With financial year 2021, there are some small changes. We have got a new thing known as a deemed to be resident in India. So it is for those who are ordinarily resident and then stays in India for an aggregate period of 182 days, provided the total income exceeds 15 lakhs. Such people are considered to be deemed to be resident. So you have got various conditions for a person to be called as a resident, not ordinarily resident, and non-resident. So with this, let me stop the session because we have been listening, I think, from morning onwards. Thank you very much for your patience and giving me this opportunity. I thank my younger colleagues. Thank you. Any clarification?
Yeah. Yes, ma'am. Thank you so much, ma'am, for explaining the basic principles of taxes, various aspects of taxes, right from the basic tax terminology to the advanced topics in income tax in a lucid manner. Now, your session has set a good platform for the others to take over to the next topic. I'm sure today that all the sessions were very informative to the participants, and many more informative sessions are going to come in the next 6 days ahead. Thank you so much, Usha ma'am.
Thank you, Sandhya. I see that still 113 are there. So I was doubting. I was joking with Ravi that this being the last session, that too on terminology. I don't know how many
Thank you, madam. Remaining 10 also because of their messaging me for because of power charging problems.
Yes.
Low internet and low battery, ma'am. Low battery.
Participants, a small announcement to the participants. A small announcement to the participants. Participants, you'll have to fill up every day 3 attendance links. And one more caution, it is very unfair on the part of the audience to annotate on the screen while the presentation is going on. That will distract the attention of the resource person. So kindly refrain yourself from doing all such mischief. Participate in the workshop only if you're a serious learner. Dear participants, tomorrow the first session will begin sharp at 2 p.m. Kindly log in on time. Don't miss out, as the resource person will discuss on all the 5 heads of income in the first hour, which will be followed by the next session on set off and carry forward of losses and ETDS and advanced tax by a colleague from the department, Dr. Patrick. So, sir, Ravi, sir.
Yes, madam. Again,
Over
link
to
will
Ravi,
be
sir.
shared. New link will be shared tomorrow morning, and from that link they have to join. Zoom link.
Okay, sir. I hope all the participants have filled up the attendance for the day and also the feedback.
Yeah, tomorrow it may not be the hectic schedule like this because tomorrow only no inaugural, only 3 sessions are there. We'll close by 6:40 itself. So please keep your the phones, internet, and everything be ready with that. So I will close, start with 2 o'clock sharp and close with 6:40. Thank you, thank you, Usha madam and Usha Kiran madam both.
So we call it a day.
I'm leaving. Thank you.
Thank you.
Okay, dear participants, please check your WhatsApp and Telegram for tomorrow's Zoom link and YouTube link.
Okay, right. Right.
All right, sir. Ravi, sir. Bye-bye.
Bye.
సార్ ఓకే సార్
వెయిట్ చేయాలా వాళ్ళ లింక్ did you receive all
నేను చేస్తాను సార్ చేసి మీకు పెడతాను ఓకే ఓకే ఎండ్ చేస్తాను